All right.
Good morning.
Welcome.
Good morning.
Good morning.
Who's that guy that is co-hosting with me here today? Long time no see. Hey, look, who is it, guys? It's Jonatan, back from his super awesome 4-month holiday.
Yeah, that's right. 4 months. Yeah, that would have been nice. That would have been really nice.
Yeah, you missed like a crazy week actually last week.
Yeah, no, I did check some of the streams in the background. It's pretty cool. I saw that you had giveaways every day, and then of course I remember saying to Mike to tell everyone that if we do hit 75K during this week, then we're gonna do another big giveaway to celebrate that 75K subscribers. Because you know what we're doing. We're doing every time we hit the even numbers, we're going to do a big giveaway, and then every time we hit that 5,000 in the middle, we're going to do a giveaway as well. So yeah, 75K. It feels amazing because I believe we started this project with 20K or 25,000 or something like that, and now we're at 75,000. So yeah, we're just 25,000 from 100K. So yeah, it's pretty cool.
And I think at 100K you can get this YouTube plaque, no? You can put in the background then.
I think I might retire at 100K. So I don't know. So yeah, that's right. You might get that 100K subscribers thing. That's pretty cool. Yeah.
All right, guys. So we have kind of a short week ahead, actually, at least when it comes to the market, a shortish week. We have, of course, on Friday, the good old Independence Day in the US of A. That's why there's no trading going to be in the USA. We have a short trading day also in the USA on Thursday. So it could be that either we are going to see a little bit of a more quiet week maybe this week. However, we also, of course, have some pretty important economic numbers coming in. First and foremost, the job claims. Are the NFPs actually also coming this week, or did they delay them to next week? Or did they?
I think it's coming on Thursday.
It's coming on Thursday already, yeah. So that's a nice one, because I saw earlier the JOLTS job openings on Tuesday and thought like, oh, that would be kind of weird if they then push the NFPs to the next week, which they did sometimes in the past. Anyway, we're going to play a short intro for the segment, and then we are going to be back in, how long does that take? 15 seconds. See you then.
All right.
Good. What are you looking at, man?
So I'm I've been looking at the markets this morning. I haven't really looked at the markets when I was gone. I do actually. I have watched the markets probably every day, but I haven't been trading. So, but I have been watching pretty much every day, and I do have a few ideas that I'm watching. And so I like for gold, I like the bands that we have down here on gold. I think it's better viewed on this chart here. So you see that gold is technically still within an uptrend, right?
Very much so, yeah.
It's still showing like something like this. We can even just imagine we draw one big trend line through this part down here and then connect the recent low, just to get an idea of where we are. And I think if we make that a channel instead, I think we can see quite clearly that we are in a high time frame uptrend on the, let's say, the weekly, right? So at least on the weekly, and even it's visible on the daily. But then if you look at the local structure, if you go into the 4-hour, we did have the break below that low, which kind of signaled that we might have a lower low, because we have a low, higher low, and then a higher low, and then when we broke that one, we created a lower low on the overall structure. but we bounced nicely here, and now we're back at resistance, being that previous low. So if we can reclaim that level marked as a number 2 here on the chart, I think there is the possibility of seeing some upside momentum on gold here. Let's see if I can remove these things here. I got my son in the background here as well, playing with Lego. So if you hear someone's, someone.
You guys already on summer holidays in Sweden?
Oh yeah.
Oh yeah, really? Ours don't start until what is it, like 24th of July.
Really, that's late. Ours here started at the 12th of June.
Well, that's really early. So basically, when we start, you're back to school already.
Yeah, pretty much. Yeah. No, and we just had last week the day. What is it called? The day school or whatever, the place where they go after school.
It's like when they're very small, it's called kindergarten. No, it's like the one German word everybody uses in this world, and later on we call it hort. So it's like when they are bigger after school, like my daughter, for example, because my wife is also working. She goes there and then until like 3 or 4 p.m.
Yeah.
But anyway, sorry, I didn't want to distract you from your gold analysis.
Yeah, no. So what I was saying was my kid is going to be at home for like the next, I don't know, 3, 4, maybe 5 weeks, because they told us in that day school that they had to close down that unit.
Oh yeah.
Because of something I can't remember, and because I'm working from home and our fiance has got a new position, means that I'm gonna be doing a lot of live streams with my kid here. So probably you're gonna be seeing a lot of cool Lego builds. He likes to show, he builds Lego, and then it comes to me and says like, "Oh, can you show this on the live stream? Can you put this in the background in your office?"
I'm all for that, man.
So it could be a lot of Legos. It might be like the live trading or the Lego trading room for the next couple of weeks.
That's a good giveaway. Yeah, like those big, super big ass Lego sets, like the Death Star or Star Destroyer, like with 1 billion pieces. Maybe we should give away one of those.
Yeah, have you seen that the Millennium Falcon? That's a beautiful one.
Yeah.
It's a big. Yeah, it's like it costs like $1,000, something like that.
I don't think I'm a big enough Star Wars fan.
Well, I told him when he's a little bit older, I'm definitely going to be buying one.
That's the perk of having a son, who wants to build something. When I build something Lego with my daughter, it's always like, I don't know, like Elsa from Frozen, or a puppet house, or actually she likes dinosaurs too a lot. So that's something good. Dinosaurs
awesome. Frost is cool as well. I like that movie. That's a good movie. Okay, enough Disney. let's see if we can what we have on gold here. So we have currently, we have that. Let me remove that one. Okay, so that's the level that we hit. That's a beautiful hit of that level. We can clearly see that it's being used as support here. And given the context of the high time frames, I'm thinking here that gold is, for the most part, bullish. It's in a primary uptrend. It's bullish. And I would say that as long as we stay above 3,260, or even, above that 3,100 to 150, I feel, and that's going to be this level, I still feel as though we are bullish on the high time frames. Now, what would really confirm the bullish structure here would be if we reclaim like this level. So we can reclaim that level, because right now we're seeing like a rejection of that level. But if we can start trading above this level, I think gold could come up higher. And for intraday levels, what I'm watching is this one right here. So what I'm going to be watching throughout the day and even throughout the week is the first idea for gold would be to go long from that level to this level. Just a very, very small move, something like this. But eventually, if we zoom out on the daily, I'm going to be viewing this as sort of like a big range right here. And if this is then the range, then we of course have range EQ in the middle at around this level. And then I would be watching a move up towards these highs right here for a more of a swing trade. But then we're going to be watching this whole level as resistance. So I got a helicopter right outside my house. So
Cannot
I might
hear
have
it.
to mute the mic if it gets closer.
Well, if it comforts you, I think we're collecting the trash right outside my office right now.
Right, I forgot to put out my trash before I went on vacation.
Ooh.
Yeah. So
Smelly.
yeah, it's terrible.
Mm.
But
So
yeah,
you're looking for potentially a long right now in gold, right?
yeah, I just think I mean
Oh.
I am, but I'm not really super confident in that, but I do feel like there's more upside potential on gold here. Let me know, guys, in the comments if you are looking for a possible long on gold. Do you think we might be going lower? Let me know what you guys think in terms of gold. I see that you pulled up your chart as well here with it's that a high it looks like high Tenacity. No, that's Renko.
No, that's Renko. Yeah, that's Renko. That's basically my go-to trading system right now. I'm actually in the process of automating this at the moment for Bitcoin, but
Nice.
since the trailing, it works with trailing stops, and the trailing stops are based on Renko closes as well. And there's no ready-made solution out there to deal with Renko, with a trailing Renko stop loss. So I had to completely build the bot from the ground off by myself, which is, for the past weeks, I've been like coding nonstop. And then I thought I had it already. Well, it turned out that the stop logic didn't work. Good thing I tried it with demo money, of course, first, although nothing happened really there. But once it's ready, I'm going to do the same for gold, and then connect that to the MT5, just because, I mean, it's a scalping system. I cannot sit in front of my screens, especially for cryptocurrencies, like 24/7. So I don't want to miss out on the good trades. But it's good to manual trade this. So this system I've been manually trading also with the high stakes accounts, and I'm slowly closing into that threshold where it turns into a funded account. Now I'm also looking for a long today because of two reasons. Reasons is we had during the early session, the Asian session or the European session, a nice uptrend. So every green dot here is a re-entry into a long position. Does not necessarily mean you take them all. There's a logic to it all also, but I would consider taking another one due to the reason that we are seeing a pretty good slope still, trend-wise. So we're not seeing something like where we have a steep trend at first and when things kind of start to flatten out. That would be a warning sign for me already, a warning sign, especially if I would see, for example, here on the right on the NASDAQ or the S&P 500 on the lower right here, that they are trending higher as well, because then I would expect, okay, probably we're going to see this typical pullback in gold that we very often see during when the first hype of the European session is over, so around 11, 12-ish, we see very often like that the trend reverses a bit, and then when the USA comes in, that it picks up again. But that does not seem to be the case, at least for now. So I'm very much with you aligned there, that if I see one of those new dots, which are basically price action combined with the slopes of exponential moving averages combined, and if I see one of those turning up here again, I would be willing to go long here with gold with quite a narrow stop. So the stop for this position, probably, what did I punch in here, would be at 3,280. So somewhere down here with a goal of going, of course, then above 3,300. But let's see, I have to wait, obviously, for the thing to become reality. As I said, I don't know how this week is going to be. Can be that we are going to see a little bit of boring sideways moves, maybe just around the economic releases, a little bit of action. We don't know. Sometimes weeks like this obviously can surprise us as well. One thing I noticed, if I look at the longer term, and I think I spoke about this also last week, on the two streams with Anastasia, is that gold at the moment has this typical consolidation pattern. And now it's just, to visualize. Please don't take this now, oh, this is like a descending or whatever triangle there. I'm just, using this now to visualize some stuff. We see that every couple of weeks or every couple of months, actually, information like this. So we had this here to a certain degree. We had something like this here. And this, I'm just drawing this in here to kind of visualize that what we are seeing in gold right now is, for me, like a typical, I call it a compression period. Things, and it kind of suits also the political landscape, in my opinion, we see here at the moment. It's like nobody knows at the moment, are we seeing again a further escalation in the Middle East, or possibly something with China there? Are the tariffs really something that is resolved for now? This deadline of the 9th of July is closing in there, of course, as well. So that's next week already. So it's a little bit of uneasiness, which markets don't like. But like from a technical point of view, this is very often expressed in those kind of sideways move where the market gets closer and closer, volatility shrinks a bit, and then sooner or later, this is almost always resolved, not by the market like going sideways, continuing sideways, but having kind of a volatile breakout, either to the upside or downside. Just plainly by looking at the long-term chart, of course, we can more expect an outbreak to the outside following the trend, but you never really know. And that's the thing, if we see a breakout to the downside and we see lower lows than maybe this week we had here in May of 2025, so at around about 3,160, 3,150, something like this, then we would be already maybe here discussing, are we seeing a total change in market structure, maybe from an uptrend, small sideways trend, to a downtrend again. This is a bit difficult, the situation like this, as well intraday, as if you're when you're swing trading, because volatility tends to calm down a little bit when you suddenly have those outbreaks. And I'm saying this because I want to advise you here, not on what to do. We don't give financial advice, but advise you here on being a bit careful, because the trap in phases like this, where we go sideways, where volatility is calming down, is always to try to overcompensate by picking a too large position. So you might think like, oh, I still want to earn my amount of X a week. So instead of trading 0.1 lots in gold, I'm now trading 0.5 lots. It's okay if your risk is still the same, of course, but just for the sake of, I need to earn more money, so I need to risk more, I need to have a higher position. I need to risk more in terms of that when I risk maybe $100 before, but now I'm risking 300 or 500, you can very, very, very quickly burn your fingers with that. Just my 2 cents here. I see a question where to look at the giveaway results. If I'm not mistaken, we did the giveaways live on last Thursday afternoon. During the live streams, and if you were one of the winners, you would have been contacted by email from our team.
Yeah, that's right. We did the draw on. I remember Mike coming on Thursday afternoon doing the draw. So if you did win an account during that giveaway that we did last week, then like Dirk said, you should have gotten an email. I want to go back to what you talked about with gold here and the low volatility. I think it's important to understand that high volatility, or low volatility, is followed by high volatility. So if you have a market like gold that fluctuates between high volatility and low volatility, when you have low volatility, like you said, a lot of people, they might want to increase that position size to be able to make the same amount of money in a low volatile environment as a highly volatile environment. But I think what you want to do is, instead of increasing position size during low volatility market phases, you want to understand that if it's a market that has been volatile in the past, a compression of volatility might just mean that you have a potential opportunity in the near-term future. So I wouldn't really trade that low volatility. I would wait for that volatility expansion that will most likely come. And if we're looking at gold here, it's like you said, the pattern here on gold is I'm not going to say obvious, but it's typical. It's typical a market that fluctuates between high volatility and low volatility, where you have a pattern or a range forming, and then you get the breakout, and that's when that high volatility comes in. And what's interesting on gold is, like in the forex market, in the forex market, usually what you see is, a lot of times if you look at the daily and the weekly, you're not really going to see any maybe not any on some markets, not the strongest trending moves on the weekly and daily, but you'll see on the lower time frames there's a lot of volatility. But on gold, the high volatility moves are visible on the weekly, right? So you can see right here, you have that breakout right here. This is a high volatility environment. You get a breakout here. That's a high volatility environment. And then you have another breakout here, and that's high volatility. And now you have compression within this zone. But once you break any of these zones, most likely you're going to get a high volatility environment. So looking at the higher timeframes for gold and looking for any type of breakouts, or breakthrough downside or breakthrough upside, would be a good idea to look for that high volatility environments. And you can do the same on the lower timeframes. You can go down even to the 15-minute, and you can say, well, here is a clear low volatility environment where you have a range forming here. And as soon as, well, you can make it like that, right? So as soon as any of the range lows are breaking, you enter a more of a high volatility environment. So you get the range low breaking here. That's a strong high volatility move. And then the break of the range lows, high volatility. And then you can kind of go into the lower time frames even more, and you can focus on this area. And we could say, break below that low, and you might look for that volatility expansion. So unless you have a very clearly defined system, we're going to have Saul, the CEO of the 5ers, coming on Wednesday, showing how he scalps. And he very much trades in a way where he'll be able to make money in a low volatile environment, because he will basically look at he'll look at the range like this one. This is on the 1 minute, right? And he is going to be looking at that range, and he's not going to be adding any indicators or anything, but he's going to be looking at this range and say, okay, I'm going to buy here, and I'm going to sell here, and then I'm going to sell here, and I'm going to buy back here. And if we break out here, I'm going to buy here, and then we're going to be selling here. And he kind of goes back and forth between inside these low volatility environments, but it's very difficult to be trading that way. So for the vast majority of everyone watching here, probably like 95% of you, wait until the range low breaks, or wait until the range high breaks. You're going to be having a much easier time trading, because you're not going to be, taking 10, 20 trades per session and paying all the commissions and all of that. But it's interesting. I mean, it's very important to understand the difference. I mean, the meaning of low volatility and high volatility. And if you have low volatility, eventually that will create a volatility expansion, and I believe that's where most of the opportunity for most of you is, basically. So what I'm saying is, all of this long speech that I just had, basically what I'm trying to say is, a boring market is maybe not the market that you want to be trading. You want to wait for that volatility expansion and have some more momentum behind your trades. And if you can't find the market like that, there's no problem in just not trading. You don't have to trade every day. So if the markets are slow, then don't trade. I suspect that the markets are going to be very slow on Friday, because we get the FT on Thursday. There's holiday in the US. So Friday, I would say, like, if you're a full-time trader and you're only making money from trading, Friday's a great time to just take a day off,
Absolutely. You should really take that day off there, not trade. Very much agree. By the way, if you are not sure what environment volatility-wise we are in here, ignore the moving averages now, please, on this one. So I might as well. It's always worthwhile to have a look at this instrument here called the VIX, which is the volatility index for the S&P 500. Actually, sure, there's something like this also for other asset classes, but this is the one I mainly look at, and which shows you always kind of the greed and fear, if I maybe have to translate it into more known words. And you very often see in times when the market is kind of crashing, when we see a lot of action to the downside. So in the S&P 500, we're talking last time this happens about here early to mid-April, which was, of course, this phase here when we had this really wick to the downside all the way down to 4,800. You usually see a very high volatility. This is important if you, for example, trade options. And in a high volatility environment, options become very expensive. It's nice if you sell those options when associated with a lot of risk then, of course. But what you see normally, if you have a wick spiking above a level of at least 38 or even as high as 50 and above, usually that kind of marks an environment where volatility is going to calm down again and prices are going to rise again. Now, when I back like many decades ago saw this for the first time, my first question was, well, why is the volatility then always high when prices go down? Well, because markets go down faster usually when they go up. That's the irony, when we have a crash, usually it's like within an hour, within a couple of days, that we see something like 10, 15, 20, 25% of drawdown. Whereas when we see a recovery from a crash or climbing markets, that takes a longer time. And the normal setting, especially of indices or something like cryptocurrencies, at least when we talk about something like Bitcoin, is also that you see over time prices growing. And you can see here, for example, that we are right now at a VIX of around about 17. So if I put a line here, let's put it somewhere to here, and you scroll out a little bit, you can see that we are already not at the lowest end there, but at the more low-ish end. Which then that doesn't mean that we are immediately going to see a crash again, but it's also not an environment where you can expect like crazy volatility. It would be interesting to see if something like this is available for gold. Actually, if some of you guys know if that is available, please let me know. Otherwise, I think I need to ask somebody like Anastasia, who always has a lot of.
There should be.
Should be. No, I couldn't find it now, but I actually don't know why I never looked into this. It's kind of an interesting. I use it a lot for stocks, like for correlation analysis. I don't know why I never tried it for gold, but this is like a good instrument to get a gauge and get a first opinion, like what type of volatility can I expect at the moment. And so use that, have a look at least once a day. And if you see something like, wow, we are here somewhere at 25, 30, 35, it's very likely that you're going to see more volatile days. Means like then you should adapt also your risk management. I mean, your risk management probably should always be the same in types of percentages, but to not go crazy, to maybe not try too many new things and divert from what has been working for you so far.
So what is the VIX? It's based on options, right? Option pricing.
It's based on volatility of the spot market, I think.
But no, it's based on. I'm pretty sure it's based on the pricing of the S&P 500 options. The pricing of the options contracts in the S&P 500. So if prices becomes higher, if the prices becomes higher, it's a sign that there's investors are expecting something to happen. Implied volatility, right?
It's implied volatility. That's the point. It's implied volatility. So implied volatility means what people are thinking going forward the next months the volatility is going to be. This is important. I said no at first because options are, of course, always priced on the base asset. So, for example, the S&P 500 here, but the keyword here really is implied volatility. And if you see something like a VIX of or 50 or 60, hopefully that means that option traders or traders in general are expecting a lot of future volatility going down the next weeks and months. Usually, I think it's
I
from
read
3 to 6 months.
When I read about the implied volatility doing the CMT, I remember they had a really good example of that, saying that during hurricane season, let's say in Florida, right, you're buying insurance on your house. Now, when there's, in a calm non-hurricane season, that insurance on your house will be normally priced. But if you go and you're going to get an insurance on your house right when there's a hurricane coming in, that's going to be much more expensive, because there's implied volatility, or there's an implication saying that, well, we know that there's a hurricane coming in right now, so you have to pay much more for your insurance, because they know that there's going to be something happening. And it's kind of like the same in the options market. If enough traders think that there's something going to happen, maybe there's an event happening or event coming up, then people the pricing of options will be higher.
It's actually an environment where I, as an options trader, strive, because I'm the one always selling the option, collecting the premium for the option, and then until the expiration of the option, I need to defend my premium, so to say, with like hedging positions that hopefully don't lose me too much money, so I can keep some of the premium until expiration. And the higher than the wicks, for example, I'm not trading S&P 500 options, but of course you have something like implied volatility for forex pairs as well. So the higher the implied volatility at the moment is, the higher is also the premium I'm going to get from my option, because the likelihood of the option hitting the strike price of the option is much, much higher. It sounds very complicated. Actually, it is kind of complicated. You have like all kinds of mostly Greek letters, which you can measure then this likelihood with, and determine how you have to hedge that. Let's see, maybe in the future we can do something like this as well. But for now, I think just if you're trading intraday, if you see something like the wicks or the let's call it the implied volatility for the instrument you are trading is very high, just be cautious, because that usually means there's a lot of volatility in the market as well. So especially in assets like gold, you are very likely going to see, didn't I have gold here earlier here? You're going to see those kind of crazy intraday moves. Like when I look at a candle like this, for example, actually there are plenty of candles in gold, where we have those long wicks to the upside, to the downside, typically days where we have a lot of implied volatility, a lot of days also that are kind of cool to trade, but that are also kind of dangerous to trade, especially if you have already market bias, because you can have very often that the trend suddenly changes intraday within just a couple of minutes. For me, it's something I struggle. I'm very honest with still when it comes to gold on an intraday level, that sometimes you have an immediate switch then in market momentum from the upside, for example, to the downside.
I'm actually going to be looking. I'm actually looking at entering a potential trade here on gold right now. But first, I want to show you. I got a Lego boat here. So this is a
here we go.
Like a military themed boat that he just built, and he wanted me to show you all.
Bravo.
Okay, so I because I'm on the laptop and I haven't logged into this account on my laptop before, I have to log in. Well, maybe I do have a few accounts here. Maybe it's that one. No, it's not.
By the way, I'm going to refrain from a long entry in gold right now, because I can see a bit a switch of momentum there.
Okay, well, what I see on gold here is, let me see if I can pull up the screen here. So what I see here is, again, overall, I think it's bullish. So overall, I think gold is bullish. As long as it can hold this support, I am bullish on gold. And if you look at the lower time frames, I really, really like this retest that we're getting right here. So 4 in
Henry, Sweden does not have nuke, so obviously
no.
the boat is maybe nukes in form of Sylströmming or something like this. Yeah.
Yeah, we don't have. Fortunately, we don't have any nukes. Okay, so let's see. Where do we have the fibs here? I think we're a bit too low here on the fibs. Let's see. Where do we have that one? Okay, so yeah, this is actually perfect. So the idea that I have here on gold is going long here for a move up here. So around 2. I think that would be like an intraday trade. Let me see if I can. Okay, I'm going to get in on this one on my personal account because I can't. Yeah, I've definitely seen Lego Masters. I love Lego Masters. Awesome. Okay, so I'm just going to go in on my personal account here and go long on gold. Let me see. Where's gold? Right there. So, man, there must be some mistake with my trade copy or something, because I just opened my MetaTrader for my personal account and I see like 1, 2, 3, 4, 5, 6, 7 orders in for gold, but there shouldn't be any orders in there for gold. Okay, this is problematic. Anyway, I'm gonna take care of that later. Okay, so I'm in on gold here. On my personal account, I'm going to be looking at, let's see, on the 1 minute here. Okay, so I like the reaction that we're getting on that level, and I'm basically just looking. I'm probably going to be taking profits around here. I don't have any profit targets in USD yet, but I do have a stop loss in, which is below this low here. So this is the current trade that I have open on gold. So on my personal account, not any evaluation, because I did pass one evaluation, and that is now fully automatic. And the other evaluation that I have on the bootcamp is also fully automatic. So I need to get another evaluation to trade manually during the live stream here, because the funded account is now fully traded using EAs, and I want to make sure that I don't take any manual trades on that one, to make sure that the statistics are correct according to the EA. I'm in a drawdown though. Like I had a very good run. It's crazy because it's the same with automatic trading for some reason. I had a very good run, got funded, and then from the very first trade on that funded account, I'm in a drawdown. So it's like the equity curve looks the same as if I would be like manual trading. You know when you get funded, or
but that's something good, no? That means you are disciplined as a manual trader also. I think the only difference then is that you just cannot attend to the markets as long as, of course, you can with an automated strategy.
Yeah.
But it's I mean, I noticed that too, like especially now for this system that I'm always showing here, which I extensively backtested without tweaking, by the way. So I didn't optimize it in the backtest. I just wanted to see how it is. And I also noticed, like, you have like months where it's like just up. Then you have like 2-3 months where it's like a little bit to the side, maybe even a little bit down, and then it goes up again. So the real performance, very often you have, like, if you look at the whole year, like in 2, 3, maybe 4 months, and the rest is kind of like, maintaining your balance and protecting your balance. And for me, that's another proof why risk management is so important.
Yeah, definitely. Even with my my funded account now running on even with the funded account now, I got a 40K hybrid growth that I got, the one they got funded 2 weeks ago during the live stream, the one that is fully automatic now. Even with that one, I mean, I have to. I think risk management might actually be. I mean, it's still important. I mean, it doesn't matter if you're trading manually or discretionary or just automatic. Risk management is, of course, very important, but in one way, I think it might be a little bit more important with an automatic system, because you can only it's just one thing you can control, and that is risk. That's the only thing you can control in automatic trading. So in discretionary trading, there's many other things that is affecting your trading, it's mostly mental, right? So it's mostly, and you don't really know if are you in a drawdown because of your risk management, or are you in a drawdown because of the mental errors you're making. But in an automatic trading system, if you're risking, so me for example, I'm running 4 different EAs in one portfolio. So I have 4 different systems running as an algorithmic trading portfolio. And if one of those EAs are risking a little bit too much, it might skew the whole risk management for the whole portfolio. And if I'm not manually, checking that and making sure that I review the live results with the back testing and try to find the perfect risk management balance, then it's very easy for me to just ignore that account and just let it run. But some of the losses will be too big. Now, if I'm manually trading and I'm doing more discretionary, I'm always gonna be watching the P&L. I'm always going to be having one ear to the market and looking at my portfolio, my P&L, and be more active with the management of things. So I would argue that you really need to have the whole risk management idea perfectly tuned in from the very beginning before you put on activate that algo portfolio. So I would actually argue that it's risk management is almost more important with automatic trading than it is with discretionary trading.
I think it's both equally important, because I think when you do discretionary trading, might not be true for you. Everybody's different, of course, but you tend of screwing up more, tend to highlight too much. Oh, and that last trade, if I would have give my stop more leeway, it still would have been running into profit. That you emphasize, you highlight too much, like what happened in the last trades. In the last 2 trades, you don't see like what happened in the last 1,000 trades, which should be, of course, your guideline, at least in my opinion. But I mean, that's like a discussion that's probably as old as trading is, right? I want to very, very quickly, I normally wouldn't do that, because I've seen here Millennium Management, I've seen you like asking here a lot, like reposting your question over and over and that, and I don't want to ignore this. I haven't talked about this, at least in this live stream yet, because you have been spamming a little bit, to be honest. So first of all, we are sharing our live results. We're live trading here. We're sharing our live results. And at least for me, is normally I'm a long-term trader. So my positioning is over 3 to 5 years. The other, let's call it swing trading portfolio, is an option trading portfolio, which both are not products that you see here on the 5ers. So my journey in scalping, for example, gold, which is an asset class that I, up to 3 months ago, didn't like to trade at all. I always lost there, at least short term, has just started. So I'm going through the same development as a short term, as a scalper, that many of you guys out there are watching. And my gold high stakes account, I'm sharing here very often. As a matter of fact, I can show you right now how I'm, no, that's the wrong one. I wanted to show you, of course, sorry, not the MT5. I wanted to show you the statistics on that. So my journey is it that one? That's the one I wanted to share. And I need to edit. I always keep forgetting. So this, for example, is a high stakes account that I started a couple of weeks ago. I've been too active on this. I've kind of found my way of trading this after a couple of months. I used to be a contrarian trader on this, because I'm a contrarian trader when it comes to option trading. When it comes to my long-term investments, naturally you need to be that, right? And but I'm always sharing this on almost every stream here. How am I doing on this high stakes gold trading account? I haven't been very active here the last days because, as I said, I want to automate this, same as Jonatan has done for a lot of his evaluation and funding accounts, because I simply cannot sit the whole day in front of my screen and trade gold here because I have a lot of other stuff. But we are very transparent in what we are doing. So just do me a favor, and there's always an underlying message you try to bring through here, maybe to the rest of the audience, which is, hey, those guys aren't real. They are not sharing anything. They are just talk, which kind of is true. No, I mean, I agree with you. 99% of the content makers out there are bullshit. Let's face it. And this is all I can offer you. You cannot expect from me, for example, that I share all of my statistics from my option trades and from my long trades. First of all, because it's not relevant here. And second of all, I need to keep my edge. These are things I worked my lifetime, that I worked on for the past 26 years. So no, I'm not going to share them with you because I don't have anything to sell to you. If I wanted to onboard you, if I would say like, hey, I want to manage your money, it would be a different story. But I don't want to, because quite frankly, I don't need to. For these live streams, I'm concentrating on, can Dirk become a short-term scalper in gold and be successful? And by the looks of it, I'm not doing too bad right now with it. Could be better, going a little bit sideways right now. But overall, I've lost money. I am at plus 600 with this account. So, and the other thing is, of course, if you are very successful, if you're willing to share your track record with you are very much invited, of course, always to join us on your streams and share your knowledge with our audience. That would be very much appreciated as well.
Yeah, definitely. No, I think transparency is very important in this industry, and I do understand that people, they want like, oh, show me your track record, and I think it's a good question. I think you should always demand from people that are in this industry trying to sell services or whatever. There's nothing wrong with demanding track record, especially if you're someone who's going to manage a portfolio, manage money. Then of course you need to see that track record. If you're going to be investing in someone to manage your money, then of course you need to see that track record. I don't have anyone investing in me. What I've found is if I share my journey, especially with my private account, if I share my journey too openly, then I feel like it's affecting my trading too much. Like when I started this trading journey, when I started the trading room, I was fully transparent with everything I did. I shared all my track record for my private account. And unfortunately, that was the beginning of a massive drawdown for me. So what I do now is I share mostly my algorithmic trading journey. That is, again, in a drawdown, that one as well. And I share my evaluations. I share some of my funded accounts, but the bigger funded accounts that I have, which with full transparency is in a drawdown, and I've been in the drawdown for quite a long time. And I'm not making the same amount of money from trading today as I did in, let's say, 2023, because I had like a declining profitability from 2023. Still profitable, but not as profitable as it was back then. And that's because the system I was trading, I believe that did expire some alpha decay, and now I'm trying to develop something new with the algorithm trading that I feel is more.
That's exactly the point. The point is always alpha decay. Every trading system, sooner or later, is going to experience an alpha decay until you don't have an advantage in alpha over the market anymore, until you don't have an edge over the market anymore. And this is also, for me, the reason. I mean, for me, that happened many times over and over again, every couple of years. And that turnaround period actually is getting faster because we have more tools, that can analyze more data nowadays. Even for you with like language models, AI on a private level, you can do things that just 5 years ago would have cost hundreds of thousands of dollars. It's the same effect like we saw with the iPhone or with what we are doing here. The production, this live stream, if we would have done that 30 years ago, that would have cost probably $10,000 an hour. Now we are just, paying a software, a couple of $100 a year, having here our private setup, basically paying energy for it, and it costs next to nothing. And it's the same. It's the same with trading. Also, the one point that also keeps me from, apart from me wanting to maintain my edge, of course, that keeps me from totally like always sharing everything in total transparency, strategy-wise, what I'm doing is, this is not a stream. Our stream format is not in a way like, follow us with our trades and you're going to earn money. We say that over and over again here, that please don't follow us. We are just here to share our experience. We are here to kind of give you an inspiration how you could approach the market. Yeah, you could, and that's also the reason, or one of the reasons, my hypothesis is at least why Jonatan probably has picked out like all the traders you see here. They are all very different. They are all having very different approaches to the markets. But I'm sure like from one or two or three or maybe all of them, you can kind of pick like your toolbox or think like, hey, what Jonatan is doing there, it's actually a good idea. I should add this like to my toolbox and try that out as well. Because the sad thing is, if you just would follow everything Jonatan is doing, everything somebody like Victor, who's very successful, obviously, is doing, or LJ, what are you going to do if they are not streaming anymore? You basically are back at square one and you have wasted maybe months or possibly years.
Yeah, I think I'm not really sure what. So we have someone in the comments speaking Spanish, typing Spanish, asking if we speak Spanish, if we can do a live stream in Spanish. No, we do not speak Spanish. We're not going to do the live stream in Spanish. However, if you're well, okay. So no, we're not. Unfortunately, not speaking Spanish. Maybe we have someone in comments who knows Spanish, can help him out. But other than that, we try to keep the comments and the live stream in English only. Now, speaking of following other traders, I would say that like following what I say is probably a much better idea than what I do, because I would say that I'm a much better
so good,
analyst.
Man.
Yeah, but
my quote of the week, really. That is awesome.
I do think that I'm a much better analyst than I am a trader, and you can see an example here on the chart. Like I could say that with a very big certainty that gold is going to bounce here, like probably like above 75% probability that gold would have a bullish reaction at that level. But saying that is very different from actually making money on that. Now, because whether you put the stop loss and whether you put the TP, that's something else, that's trading, but that's quite simple. But the biggest issue here is, how do you manage this trade? Because my analysis was correct. We had a bounce here. I bought gold here. We're now up like half an hour or something like that, maybe less. Now what do I do? Do I take profits here because the initial reaction has happened? The initial idea of the analysis is done. Now, the analysis part is already done. Okay. Now it's all about trading, because yes, we had the bounce right here, and that's all we really have to care about, right? We got the bounce right here, but now what happens? How do I manage this trade? And that's the difficult part. And most of the time, I would say that I'm going to be managing the trade incorrectly. I'm going to find an area where I can say with pretty good certainty that, okay, gold is going to bounce here, but I am still able to lose money on a correct assumption using technical analysis. So I think for most of you watching this, if you see, like, there's a huge difference between my analysis and my actual trading. If I would be able to trade my analysis perfectly, then I would most likely have a very high win rate and be making a lot of money on this. But I mean, you've seen throughout the years here, we had people in this live stream. You've been following us for I mean, we've been doing this for over a year, and you've probably seen that my personality is a type of personality where I don't always stick with the initial idea, and then a bit later I'll look at the results and I say, okay, well, the initial idea was correct. I should have stayed with the initial idea. So we all have to be honest with ourselves, when it comes to the mental part of trading. It is very, very difficult to. It's easy to do the analysis. That's the easy part, but it's very difficult to follow that analysis and also accept when you're right and accept when you're wrong, and when to cut the trade and when to add to the trade and things like that. And I think that is that's the biggest. Like, that's the biggest reason and the biggest thing that I kind of want to get across to all the viewers, to share all of that psychology behind it all, like what's happening right now. So right now, I mean, the idea, I'm still in this trade, and now it looks like I might be losing money. I mean, currently right now, if you look at the unrealized P&L, I'm losing money on a winning trade, a winning analysis, if you will, but it might still turn into a losing trade. And if you can figure out how to bridge your analysis with your trading, that's where the true trading success comes in.
Don't know what happened there. I would have thought like that I'm getting a short signal now from my gold trading system, but it didn't trigger for whatever reason. Was it going to trigger below 80? Let's see. Oh, no.
And that's what I've talked about here with the psychology of this. That's one of the reasons why. I mean, first of all, one of the reasons why I'm going into algorithmic trading is because, one, I think that's the next logical evolution of my trading career. Not only because I can remove all the emotions, and for me, the emotional side of trading is hands down the biggest issue that I'm facing. Like, I have no problem with the technical side of things. I don't have a problem with creating systems. I have a very good idea of technical analysis, and I have a fairly good idea of what's working in technical analysis. But the mental side of things is really where I struggle. So creating systems, testing systems, which you obviously want to do when creating algos, that's a strength of mine. And then, so that's the first reason, removing the mental issues, if you will, from trading. But then also now with AI and everything, where you can create so many things on your own, I think if you're not trying to create an automatic trading system today, you're missing out on a huge opportunity. You're missing out on probably the biggest opportunity that the trading space have seen since we went from only trading on the floors to digital trading. It's like, it's going to be such a big transformation. It's
Yeah, I want to give an example for this, actually, that I talked about last week already, because I agree very, very much with you. It's transformative what we are seeing right now. When I first started trading, you had the choice of either getting once a week mailed your charts in the physical mail by paper, and then you would take your pencil and your linear and do your analysis on that, or you would pay for a Bloomberg terminal, which cost you around $2,500 per month, not per year. And so obviously most retail traders cannot do that. Actually, if you're working in a bank or a hedge fund, you have your own Bloomberg terminal, you can consider yourself lucky already, just because it's so expensive. And then we had the switch over to that the first online chart, not online, offline, kind of, you had to download your data and then unpack your data for desktop software. But when you could look on your charts there, next step then was that it was automatically loaded. So precursor versions of TradingView, MetaTrader 4, for example, was one of the first ones out there. And that was a big step, because it empowered us retail traders to do at a fraction of the cost what a lot of professional traders, what a lot of those people in banks are doing. And now we are in a time where we see the same for AI and large language models. If you just go back 5 years ago, what you are now able to do with ChatGPT, actually I prefer Claude, would have cost you several hundreds of thousands of dollars every year in research budget. 5 years ago, I was manually coding Python to do correlation analysis, to test my system. I had to manually or with self-programmed algorithms clean up my data first, ensure my data is clean. I can now do within half an hour with AI what took me a week back then. So, and there's no reason why you cannot do this as well. As a matter of fact, I think like 2 or 3 weeks ago, I did like an hour special about on a very shallow surface, how do I go by with this process? Very, very shallow. But you have to do that nowadays, because this is what will bring you ahead of the curve. And over the course of the next years, this edge you can have with this is going to approach zero again. And then you need to reinvent yourself as well. It's really gold digging time, in my opinion, here at the moment. Not here anyway at the 5ers, but in general. When you, I don't like the name AI, by the way, because everybody puts AI on everything right now. I'm talking really about those large language models, ChatGPT, Claude, AlphaSeek, whatever you want to use, that doesn't really matter. That helps you to dig through large amounts of data in a structured way, like a data scientist normally would do.
So I think there's I'm currently using a software that I think is my edge. I don't want to mention which software it is, because I think it's nowadays in the trading space, when it comes to algorithmic trading, it's not only about the system, it's about the software that you're using, because now there's so many different types of large language models out there that you can use for coding. And not only that, there's specific AI agents coded or created or trained on trading language to create systems for you automatically and then test it. So I think nowadays it's not only about the system, because there's so many systems out there. Like, what you can do is you can go out and get a book, like any trading book that was written before 2000, based on the systems that like the old school traders used, maybe on the floor, maybe something like the turtle traders, or something simple like a breakout above a 52-week high, simple things like that. You can find systems that have been profitable since like the 80s, and they're still profitable today. And there's so many resources out there where you can find these profitable systems. So there's not really a shortage of profitable trading systems. But the key is, how do you create them? How do you test them? How do you evaluate them? And what softwares are you using to evaluate and confirm its profitability? And maybe also, how do you optimize them, right? And I do have a few softwares that I'm using to create my algos that I think is one of my biggest edge in this. And I'm hoping that will be what really kind of changes the game for me in automatic trading. But I think I only have maybe 5 years to do this. And
probably less. I mean, it's such
the
curve is, it's like, I mean, just compare what is possible now to last year. It's crazy, the amount of
I would say
new
that
features that come.
I would say that with the exponential growth that we're seeing in AI, I mean, I remember reading a couple of books on this in the past, like reading like Life 3.0, and then Nick Bostrom's books on it, super intelligence and things like that, and the way they're describing when they think we might have super intelligent AI, and the timing is just we're getting closer and closer and closer. Like 20 years ago, they said like, oh, maybe in 100 years, now they're talking about maybe 50 years, and some people say, oh, in 10 years, so it's like we're getting closer and closer and closer. I believe when we're getting AGI, it's like not only is so before we had this AI explosion, people talked about how the jobs that are going to change is the blue collar work, like the factory workers and things like that. But the jobs that are actually changing is the creative jobs and the work in finance. So a lot of people think that the next AGI or the first AGI will, I mean, in the world of business and especially finance and trading, is one of the spaces where there is a high likelihood of the first AGI actually being created, because there's so much money being poured in. So either it's going to be like defense or trading. And when this happened, because it's not a matter of if, but it's a matter of when, most likely, the whole trading space will change so drastically that I wonder if the failure rate with discretionary trading is just not going to skyrocket, and there's going to be an even higher failure rate within the trading space. So I think that we have between 5 and 10 years to really make it in trading. If you're watching this, I think within 5 and 10 years, the trading space is going to be so much drastically changed, and not only the trading space, but the whole world, where it's going to be increasingly difficult, because now you're not just trading against bots and algorithms. You're going to be trading against computers creating bots and algorithms, and that's on a whole different level.
That is true, and it's all black box, and so nobody knows what's going on anymore in the bellies of those language models, how they come to the conclusions that they come to. And I mean, I don't want to get too philosophical, obviously, on a stream like this where we talk about trading, but for me, it's really a junction in the development of humanity. We are either going into a more dystopian future where we have like even less super rich, not even less, we have like a minority of insanely rich people, or maybe AI, and the rest of us is going to slave away somewhere in the factory, work for food. And or we are going into a future that is more like Star Trek, where nobody has to work anymore. You can work if it's like you're following your passion, you can work. And we are going to have something like a universal basic income that empowers everybody to live off it, because the production of things is just so cheap, thanks to something like 3D printers. I think really this is the junction. Either let's hope for the universal basic income, that we all can follow our passion. But looking at the developments since the 1980s, my guess would still be we are more looking at a return to the feudal system of the Middle Ages, where you work for your grand king and you have to offer the virginity of your first daughter to him as a sacrifice.
Yeah, I mean, it's definitely going to be a very, very exciting and different future. It's really, it's very exciting at the same time as it's very it's also quite scary, because I mean, imagine you have not a human creating a AI system, but you have an AI creating a business, starting a business, creating a firm, getting investors, and those investors might just be other AIs, and then together creating a system that is supposed to be profitable, but instead of being profitable, it's just completely taking over the whole system. So either you'll have like complete equilibrium, maybe the markets are just going to be 100% efficient, and they're just not going to move a lot because you remove the idea. Because, you know, I'm a believer that technical analysis works because of human psychology. You have trends because mostly about, you know, human psychology. What if you remove that part altogether? What if you have just AI taking over the whole trading space and just creating equilibrium? It's very interesting idea. And then of course you would
It's
just have,
crazy, man. Yeah.
yeah, and then you would just have instead of people trying to make money from work or trading, you would just have a completely equilibrium capitalistic society with universal basic income. It's, I mean, the future is so vastly, I mean, the potential of having a vastly different future is just insane. Yeah.
It's exciting. And I'm seeing here Louis posting something. I built a gold scalping AA with Grok, which I believe is the AI of Twitter, aka X, last night. And over last 3 months, total trade 242 gross profit, won more than lost more, so 1,300 and something in profits, all from a 100 pounds. AK will post results in ABL. Even if that maybe is a little bit exaggerated, you know, you need to take into account obviously something, maybe I don't know if you did it, obviously, like trading fees, spread, slippage, and so on and so forth. But it showcases, you know, what is possible. I sat down last night and I created a trading system with the help of not EA, AI. And that's like, it's crazy, no? And I mean that something like this is possible. And just 5 years ago, you needed to be very proficient in Python. You needed to, especially if you want to learn something like machine learning. My God, when the first transformer-based architecture, the one that AlphaFold was using and to predict how proteins are folding, which is one of the most complex, insanely complex tasks data-wise you can analyze and try to predict with. And back then, transformers were this new kind of machine learning architecture. I spent so many dozens of hours to read into this and try to implement that for my long-term forecasting of the financial markets. And now I need I need to do like a one-liner in Python to just, you know, import it and let it run. It's crazy. All within 5 years.
Yeah. It will is. We talk about how the world is going to change, but the digital landscape has already changed, you know, drastically. I mean, I'm on social media a lot, and I see on Twitter or X that most of the replies and most of the posts, it's just ChatGPT.
It is, right? Yeah.
Yeah, most of the comments is just ChatGPT. I see here in the comment section on the live trading room as well. Most of you are genuine. You're not using AI, but every once in a while we have people coming in and they're just posting ChatGPT stuff. Like it's just digital content today is, if you're not using AI, you're going to be so behind, and no one wants to work with you because you're not able to produce the content in a timely manner than, you know, another firm would do. But the problem with that is that the content becomes all the same. It's just all the same. Like it's crazy. We got on the gold right here. We do have a low time frame breakout right here, so looking quite bullish. So if we do see continuation to the upside here and another higher low here, I will be moving stops to entry on this position. So what I'm going to do is I'm just going to move my stops up between below that low right now. And again, I'm not trading this with the 5ers today because I was not able to log into the account in time here on my laptop. So let me just adjust that stop loss. All right, all good. So that's the gold long I'm in currently.
Don't you think, like, when we talk about creating content with AI, they're like certain, you can tell, like, if you've worked with language models, like what content usually is created by AI and what not, you know? Like, for example, when it comes to trading related content, I noticed, like, if that content is created by ChatGPT, you very often stumble upon the sentence, whether you're a beginner or a seasoned pro, this is for you, you know? And like, and the excessive usage of very bloomy language, that's a dead giveaway from me nowadays. So I wonder, like, going forward, if like human created content is going to be like something that is super duper valued, you know, that this is actually niche where you can shine, like say, like, I'm not using AI. Everything I do content wise, creative wise, this is 100% human generated.
Yeah, so I most of the content I create is a mix of both. So what I have is, for me, it's very important to be genuine. So when I create content using AI, and I'm also very good at seeing what content is created by AI, like, because I've been working with AI content creation for a long time. So I know, I can see when AI has been used. But I do have a process which I think is fairly unique, where I'm able to let the AI know, the way I speak, the way I write, and everything. And well, I can't give everything away, because I think that's part of my edge also in my career as a content creator as well. But I think it's the key to success in that is how you talk to the AI and which instructions you give it, and also the output is only as good as the input.
Yeah.
So if you tell ChatGPT, for example, if you tell it, write me a tweet on trading psychology, you kind of know what you're gonna get. You know what you're gonna get. But if you instead use like voice to text, and you tell the AI a story about one of your own struggles in trading based on trading psychology, and then you tell it to write a tweet on that in the same language as used in the original text, then you're going to get a completely different results. I think it's how you use it, right?
Yeah, that pardon me. Like my go-to theory when working with AI, and I see that also, for example, like some of my coding tasks now to create my system and deploy my systems, then the quantitative, the algo trading systems, I outsource also obviously to AI, because it's a redundant task. So why do I have to code it myself? And I noticed like that these language models are a lot like human beings, meaning they tend to try to find the easy way and the lazy way out, like the minimal min-max principle, or whatever that's called in the economic terms, meaning like they are not going to double check themselves, and they are always going to find the most lazy way to answer your question. And my solution to tackle this kind of is to break up my prompts into small things, like, okay, this is the grand goal I have. This is the checklist I have created to go to this goal. Start with point 2 and keep it short. Start with point 1 and keep it short. Okay, I'm satisfied with this. Now we can start working on issue number 2, for example. But there are a lot of different ways I see online of people how they deal with this, like the laziness, also the hallucination. Like if you ask, for example, ChatGPT, hey, write me a summary of the markets, what happened last week, financial markets, with an emphasis on stocks, cryptocurrency, and forex, I can guarantee you it's going to sound okayish, but the prices it's going to mention are at large scale going to be wrong. It's going to tell you something like, oh, the NASDAQ had made a new high at 20,000 points, when in reality the NASDAQ is at 22,600 points already. And
yeah, and it's going to be very confident in the answers as well. So for facts, I never use AI for facts, or
yeah.
like where information it's critical that information is right, because it's going to get almost everything wrong. And that is, I'm surprised how bad ChatGPT is at actually finding the correct information.
While yet pretending it's the right information.
Yeah, like it's I can ask it a question. What I think is really, really cool about ChatGPT is, like, if you have, so when I was now on vacation last week, we had an issue where the TV at the place that we stayed only had like Apple TV, and we had to sign in from an iPhone into the Apple TV to be able to use the Apple TV. And then there was some issue with the Wi-Fi and everything, so I didn't really figure out how to disconnect from the Apple TV. So I'm like, okay, well, I'm not going to spend an hour trying to figure this out. I'm just going to ask ChatGPT instead. So I ask it, and it says like completely wrong. Like everything's just completely wrong. And it's like, go into settings, click this. I'm like, there's no option for that. Like everything's completely wrong. But then I take a picture of like the menu. I take a picture of the menu, send it, and then everything's like perfect. I think it's all about, you know, what information are you feeding it, because the input is as important. Is very important for the quality of the output. And to kind of tie this into trading, right? Now, AI can be extremely useful in trading for many different reasons. You can create trading strategies with it. You can help it as your personal trading assistant or personal trading psychology coach or performance coach or whatever. But it's very important that the input that you give it is good enough for to get that high quality output. Because when you if you ask it to just create a trading system, it's gonna give you the most crazy trading system that just makes no. It's gonna base it on EMAs, and it's gonna base it on like a
EMAs
debt
or
cost or gold
RSI,
cost.
MACD,
Yeah, and it's like
the usual suspects. Yeah.
so when you create a trading strategy with AI, you really need to make sure that you know what you're doing and you understand you understand technical analysis before getting into it. Okay, so the gold trade is looking good here. I'm wondering if anyone is trading gold today. Anyone in gold? Let me know if you are looking at gold or anything else here today.
Well, I'm waiting for actually right now an entry short in gold, but because I see indices also ranging a bit higher. But for whatever reason, I didn't get it before, which was good. So that means the system was working. So if we tick down now here to something like 84, 83, I could imagine that we are going to see a short entry. So I was like, oh, yeah, you shared my chart here. Thank you. I was expecting earlier to see something like around this area here, a short entry, but it didn't give me. Good that it didn't give me that one, because there might be a chance to enter higher. But I've got to see it. It might also be a case of where we have a quick, like a quick consolidation to the downside, to this area of 80, which is very important, like Jonatan also said earlier. And then we're just going to continue higher. So in that case, I would sooner or later see a new green dot. Let me dumb it down, green dot. And that would mean for me a re-entry then into a long position. Although I'm a little bit reluctant in doing this, because from my experience, usually the first one or two green dots you are seeing here are the most important for the whole trend. So what I usually would do is here I would enter on this first green dot and then just trail, for example, 1.5% or percent this entry. So probably maybe I would have been stopped out here on this move to the downside. Still would have been a great trade. So it's not the optimal trade to take here, and it's one of the reasons also why I want to automate the system. First of all, because I know it works, and I know the risk-adjusted metrics like Sharpe ratio, for example, are insane. Really, they are unlike anything I've ever seen. So that's why it's so far high up my priority level. But sadly, the day only has 24 hours, and obviously, you can see here this signal was at 2 a.m. Berlin time. And I don't know about you, but at 2 a.m., usually, hopefully, I'm sleeping. I usually wake up actually once at 2 a.m. because I have to go to the toilet, since I'm an old man, that happens. But I don't dare to, on the charts and then see like, oh, there's a green dot, I need to enter a trade now. So I'm not doing this. This is one of the reasons why I want to automate this.
So I wanted to ask you about the Renko charts there, because Renko charts are not showing showing price action in the same way that the candlestick charts are showing it, and it's not showing the full range of prices. So are you using traditional candlestick charts to compare, or do you only look at Renko?
Yes, without giving away too much now, because I said earlier there's price action feeding into this as well. So there's price action from traditional candlesticks feeding into this, not the ones you usually would see, like outside bars, bullish, bearish, engulfing patterns, and you name it, pin bars, and so on. There are more complex ones. And then I use a Renko chart here because I want a clean trend. The one benefit, in my opinion, that Renko charts, for example, have over other charts like Heikin Ashi that also clean up your trend a little bit for you and reduce the noise, is that they only draw something if really a price change happens. So if, like at this stage now, we are at 3,287. In order for a new Renko block to the upside, we would see a 3,289. The last one was at 88. And I'm using a block size here of $1. As long as this doesn't happen, and even if it doesn't happen until next week, Tuesday, the Renko chart is not going to draw anything. So it's going to completely filter out the sideways noise for you.
So the Renko chart is a range based bar, right? It's based on it will only print. It's like a box size, basically.
Yeah, it's a box size. You can. It's a box size. If you go into the menu, like here, for example, say instead of $1, I want my box size to be $5. Maybe because volatility is crazy or whatever. And I click on apply. You can see it changes the picture very much. It shows me then, well, actually, since pretty much the 25th of January, June, sorry. We've been more in a downtrend when it comes to a box size of $5 for Renko.
But doesn't this create a problem with, let's say, stop losses, right? Because how do you deal with that? Because obviously you can have price trading within a certain range before that's even showing on the chart. So you obviously need to make sure that you have a stop loss placed in an area that is bigger than your box size.
Yes and no. This is actually what I said initially. There's currently no existing solution for the MetaTrader 5 or for TradingView, for strategies on TradingView that bases your stop loss on Renko charts. They are all based on candlestick charts. And of course, if we are here right now, we could see like some fluctuation, going up, and on a candlestick chart, your stop loss is triggered. Suddenly. So this is why I had to create my own solution. I had to hard code my own solution for a stop loss system based on Renko charts, because I want, let's say an example here. Let's say our stop loss is here right now. So I want to trail this stop loss, let's say 1.5% underneath the highest Renko box. So only when the next Renko box is drawn here at 90, for example, I want my stop to adjust higher. Whereas on candlesticks, like if the price goes up to, instead of 3,290 to 3,289.98, it's going to adjust the stop loss higher. And I actually back tested that. And if I base my stop loss on candlesticks, the system is losing. If I base my stop loss on Renko boxes, it has a very, very high risk adjusted return. It's such a minor difference if you think about it, but it has such a high impact on your risk adjusted returns or on your return in general. And it's one of those things that you don't think about necessarily, when you create a system like this. It's one of those things that you see once you are in the phase of testing your system and wondering like, hey, how come this worked when I tested it first, and now it doesn't work anymore. Oh, because I based it on Renkos, and I need to base my stop loss also on Renko boxes and not on traditional candlesticks or Heikin Ashi charts or something like this.
Yeah, it's very, very interesting. I like the visuals of the Renko charts. It's so easy to find trends, and I also, I like the idea that a move on the Renko chart will basically almost or most of the time be a breakout move. So if you have, it's always going to be like a volatility expansion. So, and we talked about that earlier, with the with gold. We talked about how a low volatility is always followed by high volatility, and Renko charts are very good at displaying that high volatility.
But you have, of course, the trade-off also that you sometimes are late into trades as well. You cannot expect like a contrarian type of trading thing. I'm going to enter the markets when price is lowest, I'm going to exit the market when price is highest. You are, like with moving average, always a tad late to the game. But especially in conjunction with having a stop loss running based on Renko bricks, I think it more pays off because you just need to be like for example, without giving away too much, like this system, for example, has a success rate of around 53%, but the Sharpe ratio is at 3.5, which is insane. Everything above 1.5 is really, really good for a Sharpe ratio. So you're going to have very often that you have a number of trades that go against you. Often you're not stopped out at 1.5%, but maybe at 1%, 0.8%, 0.4%, something like this. But the trades that run for you very often end up making like 3, 4, 5, 6, 7% in profit.
So
and
3
this
point, Sharpe ratio above 3 is very, very good. Have you seen that you have that in only back testing, or have you seen any results live trading with that as well?
That's why I want to put this live. My go-to is always like, if I see a Sharpe ratio like this, I'm going to divide it by 2, which is going to be more realistic then. But of course, this is like why the next step now is, plug this into an evaluation account, high stakes, bootcamp, whatever, for the 5ers, and see how it's really doing.
Yeah.
And if over the course of, we're not talking about like 1 or 2 weeks, of 3 to 6 months, it's showing a performance that's at least 50% of what the backtest said. And I said this earlier too, this is not an optimized backtest. So I didn't go by and say like, optimize the inputs of price action, optimize the angle of the slopes of the moving average that lead to those buy or sell signals. Those were fixed in place. The only thing that I asked the AI to optimize is like where you have to do a minimum of X trades over a period of, for example, 6 months. For that period of time, the trailing stop loss, which one would be optimal? Which still is a little bit optimizing, of course, the system, but from a risk management perspective, not from a signal generating perspective, which is a huge difference in my opinion. But still, if I see something sharp, actually any Sharpe ratio over 2, my alarm bells go off already. I say like, okay, this is probably not something realistic long term. But if you see something like 3, 4, or 5, and you think about it like, okay, even if this is like only 50% of this is true in reality, you are still having a highly, highly profitable trading system in terms of risk-adjusted returns. Any hedge fund out there is always aiming for a Sharpe ratio for a strategy of 1.5 plus. So
yeah, I think in algorithmic trading, I think Sharpe ratio is definitely the most important metric to follow. So the philosophy that I have in creating these systems is that I can have. So the idea here is that I'm gonna have, at the end of the year, my goal is to have at least 50 different EAs with 50 systems running, and they don't have to have a Sharpe ratio above 1, but combined, they have to create a good Sharpe ratio. So you can have, for example, you can have a system with 0.7, another one with 0.8, maybe 0.9, but then you combine them and adjust the risk management of them. You can have +1 in Sharpe ratio, and that's what I'm trying to create. So instead of creating one system that is very profitable, I want to create eventually hundreds of different subsystems that are just a tiny bit profitable, and then you combine them all, and you have 200 systems that have a very tiny edge. You combine them, and that creates a big edge.
And then you can also do something like if you have a portfolio set up like this, you can analyze like in which market condition does which system outperform. And then when your expectation is, okay, we're entering this market phase, I should put more emphasis on trading system number 15, 38, and 89, and adjust the risk management to a more lower conservative approach for trading system number 3, 9, and 57.
Yeah. No, it's definitely,
but it's really complex already, man.
Yeah, it's really complex. The complex part for me is not creating the systems. The complex part for me is creating a risk management strategy.
Yeah.
When combining different systems, because if I had just one system, I would just look at the max drawdown, and I would just apply a risk management strategy where the max drawdown isn't going to be a problem. But if I have many different systems, it's difficult to. So let's say I have 5 or 10 different systems, and they all have different max drawdown. Now, what I can do is I can just adjust the risk on all of these systems individually to pair them with the max drawdown. But then I need to put all of these systems into a portfolio, run tests on all the systems together to see what the max drawdown is going to be with all the systems together, and then figure out, am I going to run the same risk on all systems to make sure that if they all have a losing streak together, or am I going to run a dynamic risk approach on every single individual strategy? And that I haven't come to that stage.
I mean, ideally, you probably should have something like that. When you have like one system outperforming, you have a drawdown that is not as high as the outperformance of the other system, so not go and come into or be in a situation where when there's a drawdown, every system is in the drawdown, because then the question always is, why do you need 100 systems if they are all in drawdown at the same time?
Yeah,
and you can just stick to the best ones.
Exactly. That's the idea. You want to have systems that are as uncorrelated as possible, which I fear is, with several hundreds of systems, I don't think it might be possible, but very unlikely that they're all going to be uncorrelated, because they're going to be trading the forex market, and the forex market is correlated with a lot of, so one move in Euro USD might be correlated to USD CHF, or the JPY pairs might all be correlated. So it's going to be very difficult, a very difficult task to do. But it's going to take a long time. But hopefully,
but that's exactly the type of huge block of data that you normally would stand in front of and say, like, oh God, I have this idea, but I have no idea how to approach it. I need to hire a data scientist for this.
Yeah,
which is going to put me down if that person is any good, like 200,000 a year, and then he's going to work on this problem for a year without any guaranteed results. And this is exactly where AI, where language models can help you to get through this data, to analyze, like, is there an edge? And if there's an edge, where's the edge? And if you if we're talking about 100 trading systems parallel, this might be too big for a data system, but then that might be too big for an AI. So if you put this into ChatGPT is probably going to say like, you've exceeded the chat limits very quickly. But it could help you, not ChatGPT, but something like Claude, for example, or AlphaSeek to create your own backend system that is only designed to help you go through this data and analyze the outcomes that you are interested in, to create your own piece of software that does that.
I'm gonna be back in just a minute. Give me a second.
Sure. Good, guys. So going back to trading, we've been a little bit philosophical today. And again, I see the question here, did last week's giveaway winners get announced? They got announced actually in the afternoon live stream last week, Thursday. So you might want to go back to that one. However, if you won the giveaway last week, you must have gotten an email notification also. So because everybody had to enter the emails, obviously. So if you didn't get this email notification, that means you didn't win. We're going to have another giveaway because we reached 75,000 subscribers last week. This week, so stay tuned, tune in to all the live streams this week to know how to enter that awesome giveaway. And I heard Jonatan last week telling me or talking about that this is probably going to be a very nice and very valuable giveaway that is going to take place there. Now, going back to gold here, I said it earlier already, I'm actually right now waiting more for a short entry, which would get invalidated if we see price really moving above 3,300. But looking at if we would move a little bit lower here, I would be intrigued to do a short trade with really just a very narrow stop loss, probably over the last highs we saw here at 3,297. But I'm going to wait here, of course, until really my system says, okay, this might be a good opportunity to short here. I don't want to skew the system here. One thing that worries me a bit about, actually, it doesn't worry me about shorting gold, but what keeps gold from reaching levels at the moment above 3,300, in my opinion, is that we see quite a nice performance of the futures already. So NASDAQ trending very much higher. We have the S&P 500 approaching, trading really at, look at those entries here, beautiful. Approaching 6,200. We ticked a little bit over that already last night, actually this morning. So could be in for a good day. Remember, however, two things, guys. We have this week, first of all, the 4th of July, which is going to be a public holiday, Independence Day in the USA. So there's no trading taking place. You can see here, no data also published here. Thursday, at least for the US stock markets, is going to be a shortened trading session as well. Lucky here, we are still going to see the non-farm payrolls, which are supposed to come in a little bit lower. One indication always for those long farm payrolls are the JOLTS job opening, which we are going to see published tomorrow afternoon at 4 p.m. CET, expecting to come in here with 7.3 million job openings. So if this one comes in lower, we kind of could have an indication that the 110,000 created jobs might also not be hit. Now, normally, I would say, like, if we see a number coming in here at, for example, for an NFP at 100K or 95K or something like this, that this would be bad for the markets. You would probably expect indices, US stock indices to fall, Bitcoin to fall, a risk on move, a dollar getting stronger, for example. However, bear in mind here that the job market is kind of the last thing that the Fed is still waiting for in terms of slowing down to have a reason to lower inflation rate. To have a reason to lower the US interest rate. So we are still in an environment right now where we see inflation a bit sticky over 2%. And Jerome Powell in his speeches has said over and over again, we would like to see this, the job markets in the USA to slow down. So maybe a tad higher unemployment rate, NFPs with lower amount of newly created job per month, in order to have a justification to, in the next meetings, lower the interest rates from this level of 4.25 to 4.5% to maybe underneath 4% then. So it's going to be quite interesting. Of course, the combination with a week like this, where especially a lot of the institutional traders are on holiday, probably residing, in Aspen or at the beach houses somewhere in New Jersey or wherever you go as an American rich ass trader. And so expect a bit of a slower market, which could be skewed up by the NFP then on Thursday. Welcome back, Jonatan.
Hey, yeah. NFP Thursday is going to be very interesting. We also have Mike coming on in about 10 minutes, and I know that they're going to do like a special NFP live stream as well on Thursday.
On ABL or what?
Yeah,
or
on ABL.
The5ers. Traders.
Yeah, probably same time as our live streams. Let's see how that goes.
I said earlier when you were away, I'm actually waiting for a short entry in gold here.
Okay.
Especially if I see, I mean, it's a bit crazy, no? We see the markets, the US indices trending so much higher. We have this early already that the S&P, it's based on the future. It's a CFD here from Black Bull, but of course it's pricing based on the future, which hit a new all-time high. We're already over 6,200 without the US already, being trading.
Wait,
this is how positive a market.
Oh wow! It broke out. That's crazy.
It's super crazy.
Yeah, I mean, yeah, the markets are super bullish. It's just amazing. It's yeah. I definitely got that. I did get my investment portfolio. I did get that completely wrong. I thought that we were going to get. I thought, the Trump tariffs, I thought that was not a buying opportunity, but it clearly was.
Yeah, but I mean, let's be fair. Like, nobody got this right. Nobody expected a V-shaped recovery in a political environment where we're talking about war, in a political environment where we're talking about a potential second war, China, Taiwan, in a political environment where a US president basically goes nuts. I'm not only talking about tariffs and the effects on the economy, but being, a president that is very hard to kind of predict what he's going to do or even say next, and if this is going to be smart or not. So definitely unexpected. I know a lot of fund managers that are running behind and that have a really, really severe case of FOMO now, because they have a hard time explaining to their clients why they are not more heavily invested into the US stock markets or in general in stock markets, not just the USA. We see that almost anywhere, everywhere at the moment. So I don't want to be in their shoes right now, when you have to explain to your investors, you're running a stock mutual fund and you have to explain to your investors why you are sitting on 40% cash or something like this.
Yeah, I think there's a lot
somebody
of
like Warren Buffett, who's like sitting on a large pile of cash.
Yeah. I mean, there must be a big number of people being sidelined here, because I think this move, maybe not this move, because obviously, with the tensions in the Middle East kind of calming down, I think that kind of renewed some interest from the bulls. But I still feel like the current situation that has been for the last couple of months on paper does not feel very I'm very bullish. But then again, I'm not a fundamental analyst. I'm a technical analyst, and the market structure broke. That's the thing. The market structure broke from a technical perspective as well. but then it very quickly recovered. I mean, we recovered that 5,800 level quickly, and back in the bullish market structure. Quite amazing to see.
Yeah, and we also see this on the US dollar going into the direction of risk on more. No, it's getting weaker and weaker and weaker. AJ and I, we've been talking on the ABL podcast every second Wednesday, by the way. We are doing this. Next one is coming up this Wednesday. So if you want to join us, that's more of an open discussion where you are very welcome, to grab the mic as well, ask your questions, share your opinion about the markets. We've been talking since we did this the first time, which was, I think, 6 weeks ago, about that our preferred direction going forward the next 6 months is selling the US dollar against something like the pound sterling, against something like the euro, especially in my case against the Japanese yen. So one of my biggest options positions right now is a sold call and a bought put for US dollar yen, which is going to expire around 1.5 months with a strike of 145. I didn't have the greatest timing on this trade, so I got a little bit of FOMO also on this one. So I entered it prematurely, but that's the beauty of doing it with options. You're not so reliant on, it ticks against me, you are immediately in loss. You always have the instrument of hedging your position a little bit, because according to my model, where I compare what is the Japanese interest rate environment or the yield on the 10-year treasuries. That is such a hard word. And the 10-year US treasuries. And we should actually see dollar yen trading more around 135 to 130 over the course of the next 6 months. So this is one of my major trades when it comes to options right now. Yeah, other than that, it's crazy. V-shaped. Everybody's always talking about a V-shaped recovery. Remember a couple of weeks, months ago, we were still talking about the yield curve uninverting itself and how that is going to cause a major regression. I wonder, is this really becoming true now? Or are we going to see this with a delay because we are going to see the effects of the tariffs, like on inflation, for example, on consumer confidence, on housing starts, all those fundamental key points in 2026 and not this year anymore?
Well, I mean, it could still happen, later in the year. It doesn't. I mean, there's still the possibility, but I think I did put a lot of time and effort into that type of analysis, but that was mostly because I thought it was very interesting and I kind of want to dive into the subject and learn more about it. But then I quickly realized that there's so many layers to that. It's very difficult to understand how the world economy works in a more detailed way. I mean, we can understand central banks. We can understand the idea of raising or lowering interest rates and what effect that has, and the health of the economy, why or when they might want to raise or lower. But then there's so many other layers to trying to understand recession, which is, I would say, almost impossible. But
I mean, this is also the reason why the smart economists always struggle to forecast how is our GDP growth going to be. They never get it right, basically. So I really wonder, is like what I just marked here last, was this our recession, our stock market recession, or our stock market reaction to coming out of this yield curve inversion? This slow, this tick down. So this ticked down and then we went up again. That would have been, I mean, technically we had a recession in the USA, We had, I think, 2 quarters of declining GDP. Was that it?
Yeah.
That is very much like what we saw during Corona then. that's insane. I really didn't expect that, and I did this wrong in slowly fading out of my stock positions, also out of my Bitcoin position, which I've been doing in a percentage since the beginning, actually since December already. In a percentage, I should have held longer onto it. Now, always easy to say that, of course, on the hindsight, especially if, like, we're looking at Bitcoin, you're up something like 10x on it, or 5x, and but interesting development, and it shows me also always, despite me having done this type of fundamental analysis work for such a long time, the economy always surprises me. Such a complex organism that you just cannot account for everything.
Yeah, just give me a second. I'll be right back.
Yeah, sure. Anyway, we have 12:30 already also, and I think we very soon are going to have LJ and Mike joining us here, or just Mike, no LJ, or just LJ and no Mike, I don't know. And yeah, I mean, you are saying that mobile Latino America patient really is the key here, not only for long-term analysis, that also, of course, is true for short-term analysis. I mean, you've been hearing me talking for probably the past 1.5 hours about a potential short entry in gold, and it's really an exercise in patience. You know, you need to wait until things really happen. You know, until you see the signal, until all stars align. So there's no reason to prematurely jump into the markets. Trade what your system sees you with the risk management you have applied, and not force your opinion onto the market. Let me put it like this, maybe.
Yeah, I think a lot of people they don't have like a clear idea of invalidation as well. I mean, they have an idea, you know, they get an idea, and then they forget about articulating in invalidation of that idea. So they follow the idea. Like, for example, my idea to sell Bitcoin at 100K felt like a really good idea, and my idea to kind of like get out of the stock market felt like a really good idea when you had that dump on Trump tariffs, because I got out of the market before that, right? But I did not re-enter on the Trump tariffs because I thought that was like a major change in the market structure, which we saw also from a technical perspective. But my invalidation of that idea would obviously have been to get back into the market at 5,800 when we reclaimed that technical level, which I didn't, because I was kind of married. I was so invested in the idea of seeing a major break of structure. Right, we got Mike and LG. Let me know if you it's okay to add you guys.
You want us to play your intro, right?
But I want to talk to them. Like, they always play the intro, and then
I know they are.
like,
we don't want to talk to you, though. We don't want to talk to you. Why would we want to talk to you? You've been away for a week. Why would we want to talk to you? You've been on your holidays. What do we want to hear about your relaxing holidays?
I'm such a
How's it going, guys?
stupid
How are
British
you?
kid.
I do feel very tired. Like, you go on vacation. Like, for those of you who don't have children, it's like when you go on vacation with children, you go on vacation for the kids.
It's not
and
vacation.
Then you get home and you're like, oh man, it feels good to get home and work and relax, you know.
You get home from your vacation and you need a vacation.
You need
a
another
vacation.
Yeah, exactly.
Yeah.
The markets are the vacation,
Yeah, exactly. Like Monday morning, being able to go down to the office and like open up the chart with a cup of coffee and just relaxing with Bloomberg Live. It's like, yeah, that's vacation for me. But no, it's been good. It's been nice. It's been nice.
You're glad to be back.
Good.
What? Sorry?
Alrighty, good guys.
You're glad to be back.
Yeah, definitely. All right, I'm gonna jump off. Let you guys do your thing.
Same with me. And we are going to leave our audience in the more than competent hand of Mike and LJ.
The competent hand of LJ, and Mike's just gonna.
Come on.
Entertain.
Come.
Mike's just gonna entertain.
Come on.
Really. And we are going to see each other on. I said it already. If you want, on Wednesday for our podcast Beyond the Ticker on ABL. I think it's this Wednesday again, all right? Yeah. And other than that, I'm going to be back next Monday here for the 5ers. Thanks again for joining. Leave a like, subscribe to the channel. We are well above 75k subscribers, and of course, the next stop is 100. So we finally can put this YouTube plaque behind Jonatan there. Not here, but in his usual basement.
Literally above his head like that. He's going to wear it like a crown.
Yes.
He's distracted right now. He's thinking about, what color will I wear with it? Where will I hang it?
Is it pink or is it maybe?
No, I'm thinking about if I should do like fish sticks or meatballs.
Köttbullar, of course.
Yeah, meatballs.
You gotta fulfill the cliche. Come on.
Yeah, I do eat a lot of meatballs though. Very good. I'm very good at making meatballs.
Classic
one.
All right, see you guys. Take care.
Take care. Bye-bye.
We'll be right back, guys.
Low.
ABL, bring in the ABL vibes. Here we go.
Back.
Don't abuse. Venetia's saying, don't abuse the energetic drink.
I'm on my third today.
Venetia's, did you not know? LJ actually got into the financial markets by investing in Red Bull. That's actually how he got into it. That was his first initial venture into the markets. Yeah, Red Bull and Monster, and look at him now. You know, he's literally living off the stuff.
Monster's the best performing stock on the whole market. I'm pretty sure, actually.
Is it? Is that just making that up?
Percentage gains. No, for sure. Yeah.
Really? Oh,
yeah.
Okay. Oh, there you go. Oh well, then in that case, you know, let's pump up the, let's pump it up. Let's pump up the Monster. Guys, have we had any Trumpy news coming today? I'm feeling very jiffy for some reason. I love this name, Pippopotamus. This is just brilliant. I just love that name. Pippopotamus. Pippopotamus. I reckon you do that just to get us to say your name all the time. But please tell me you secured that domain name. I really want to know that you secured that domain name.
I just get the raw percentage, but yeah, from it's like 10 cents or something.
Fair.
Up to $60 plus, right? Yeah, I think percentage wise, it's something insane.
That's that's like Bitcoin.
Yeah, I mean, it's well over. Yeah, I think now where it is, it's like 200 something thousand%, like just ridiculous. So
that's bananas. That's bananas. The boys are back, LJ. Now let the chaos ensue.
Right back. Got myself a little quick trim up, bit of a haircut in between. So.
I was going to say, I did notice there was something different. I was thinking, wow, you're looking fresher than you did a couple of hours ago.
It's around the sides.
He cuts his own hairs, ladies and gentlemen. He does it himself.
Yep.
He doesn't pay for it. No expense spared with LJ. He does it all himself.
Doing it for a long time now, so.
No, he's well versed in it. I got my part on it. 4 20-ounce per night until the day I had my bad day. I got my part on it. I'm not sure I follow, but okay. I've got my coffee today. My espresso tonic in my bigger bottle today because I was on my bike today. I decided to cycle to work, and when you're cycling to work, you can't carry an open cup of coffee. So it had to go in the flask today. So it doesn't quite taste the same, but it'll do. It'll do. When you get a moment, I DM'd you something for Void. Ooh.
Okay.
Now, Jonesy, if you and Akram want to do a little love affair, that's between you and I. Don't get me in the middle of your little love affair. All right, you two, not into that kind of thing. All right, and I love you both in very different ways, but I'm not going to be the middleman for whatever it is you guys are cooking. How can I make automated trading? Do I need coding skills? Says the bad player. Just another bad player.
Not so much these days.
No.
Having an understanding is helpful, definitely, but you've got AI these days to navigate you, I suppose.
Yeah, exactly. I'm just trying to see, because I saw there was an AI new kind of AI thing advertised the other day, where it analyzes charts for you and everything else, and it's literally just through images, but I can't remember the name of it. It's what was it called?
Like for markets specifically, is it?
Yeah, so you'd take an image of a chart, and it would scan it, and it would tell you something about it. I can't remember what it was.
Because yeah, ChatGPT, you can do that sort of thing, but it just gives like a very generic.
Yeah, exactly.
There's no point. You can just look at it yourself and be like, yeah, obviously.
Exactly. Right. Yeah. It's like, oh, it's an uptrend, really? Oh, funny that.
Wow. The price is higher.
Blow my mind.
Oh my god.
Blew my mind. I'm trying to find what it was called. It was an advert that just suddenly popped up, and I was like, "Oh, that's interesting." Yeah, I ain't doing no love triangles. Henri coming from France. Henri should be the one doing this kind of thing, bringing the love together. Stock charts AI is an interesting one. Let's see, what's it? Apple.
Gold is indeed dumping, my man. Born in 2944. Man's from the future. So
I am not happy about gold because it didn't get to where I wanted it to. I was hoping it was going to go higher, and it just started selling rather randomly as well. I've got to say,
yeah,
I mean, really react from any particular real area that I thought it was going to.
We pretty much just came into the prior low here.
Yeah, the only thing is, if you look on the hourly, that the previous 1 hour wick reacted really nicely off the engulfing 1 hour from early this morning. So I do still have belief that actually we've got some more bullish momentum coming in to then take us higher before we start selling again. So
yeah, I mean, we had this sort of box marked out as a more ideal entry space, right? Between that sort of 3310, 3300, exactly. Potentially up towards 3321 at max. But yeah, no, just
hello, Nina. Lovely to see you, Nina. Hope you're well. Naveen says, I will enter a gold buy from either 3276 or 3271 from the bounce after 15 to 5 minute, possibly before the New York Open.
So down by here and here, this kind of
area. I still think we're selling. Overall, I still think we're selling.
I think if we manage to get through here, I think more likely we continue on, right? Just with how we've structured through here, sort of rounded top. Get rid of this guy now.
There is a lot of GU is going to disappoint you as well. It's going sideways. That I don't mind. I know it's going to disappoint you, Jonesy, because I know you were looking at GU earlier, but nah, I'm not so bothered about. But yeah, gold is Gold is frustrating me today, but we said it on the ABL stream earlier, right? It's it's just, you know, today just doesn't look particularly wonderful for things, you know.
I think it was a reasonable entry here, but yeah, it just would have been ideal coming up a bit further. So
if you're born in 2944, then I would expect you, frankly, to be doing far better than 11.8%. That is actually really poor, because if you're born in 2944, then you should know where gold is going right now. So, you know, you should be hitting like triple figures, you know, should be catching every single move. So yeah.
Do we want to take bets on for what gold price is in 2944 from now? I think it's better odds. Like, are humans still alive, or does AI wipe us out?
It's a much better question. A much better question. Possible form 30-year. Yes, Naveen says high time frame is bearish. Yep, exactly. I got my lion's share. I'm Audi. Audi? You got an Audi car? I'm confused.
He's outie, I guess. I don't know.
Yeah. Jayhawk wants to know, says in 2944 only bots will be trading. Yeah. That's why Born in 2944 came back to the past. So yeah.
It's basically just Neo from the Matrix. It's got to fix it.
I was just born in 2944. I don't know how much is it. But if you were born in the future,
he forgot to check before he traveled back through.
Before you came back in time. That's really, I mean, that's basic schoolboy era 101 of time travel, is like, go and check what happened in the past so that you can leverage it, right?
That and all the lotto tickets.
Yeah, exactly. So yeah. Naveen, who knows what we'll have by 2944? Who knows? Milad's asking, what's your thoughts on USD JPY, which is what we looked at this morning, LJ. We're both pretty much bearish on it. But seeing a bit of the pullback today on the 4 hour, very slow one, but it is pulling back. What are you thinking?
Yeah, so long term, definitely bearish. If we draw in like an actual proper, we've had this trend line come through here that price just keeps coming in and tapping. I've got my good old freehand kind of drawn, guys. I think I would put it through there. That's kind of the main tap point that we've had. We had the slight dip through last week, but no firm close there at all. Let's go back down to 1 hour here now. But yeah, so you can see the good old freehand Picasso drawings here. Still line up to there. I've just put them in there as general guides. But basically, we do seem to be ultimately coming down to knocking on the door through here. And then we're looking down into this next little wedge through here into the 140s. This will be the next test area for the dollar index as a whole. And then once we go out to much further time frame, we're then looking right down here to 130, right? This kind of area. So this is something I've been keeping an eye on for some time now. And it's just a question of when that actually breaks and we get down to this lower structure for the dollar yen. Basically, that comes in with the DXY similarly. This chart looks a little bit messy with some of the stuff on here. But overall, you can see we've had this higher trading range, right? Just above the kind of 99 area on the dollar index. We're now starting to shift into that lower band and then ultimately progress down towards 90, 92 on the dollar index. So basically same kind of thing we're seeing dollar yen. Ultimately, what'll probably kick things off to make that move really happen will be the Fed moving towards rate cuts. So inflation has been pretty tame. Consumers getting hit a little bit. Jobs picture is still good, but is slightly coming off. And Fed's basically just been sitting on their hands at the moment to see what the eventuality of the tariffs are, because there's a whole number of pathways that things could have come out to. So we seem to have gone a bit more clearer picture, cooler heads prevailing, things sort of working themselves out. There'll still be a bit of kerfuffle, but it doesn't look as though it's going to spur any extreme sort of moves to inflation, other than a very small sort of one-off hits, that kind of stuff. So ultimately, Fed will be shifting towards rate cuts, and you'll have further drivers then with the euro dollar as well, driving the whole dollar complex. The ECB is basically, they've only got really one rate cut left to get to that sort of 2%, which is going to be the kind of terminal level. So they'll be the first central bank to hit that terminal rates level ahead of everyone else. All the other majors still need to drop rates further, so hence it goes on a relative basis. The Fed will then start dropping, and then that'll really kick off the dollar selling. So, but yeah, this kind of trend line through here is what I'm currently watching as the kick point into the next lower area, little drop zone. And then from there, you're watching that kind of 140 level, a strong close below that to really kick on.
There you go. Milad, I hope that gave you the answer that you were looking for. If it wasn't the answer you were looking for, I don't know what you were looking for. Euro USD, LJ?
Euro dollar. Longer term, yes. As far as today, I don't think so. I'm currently sitting short euro dollar from here. I did take profit initially there. I've then re-entered here and looking ultimately for a drop down to at least 117, and then see if we can kick on through there, further, deeper move. I'd like to see somewhere down here before really reinstating any heavy longs. Most likely, though, given price action recently, I wouldn't be surprised if we sort of just stall out somewhere below that, around that 117, and then go on from there. So, however, today, I think that's sort of our move for the day. I'll scrap that so it's not confusing. If we were going to continue long intraday, I would have liked to see this structure hold up a bit more. We created this slightly lower high up here earlier towards the end of Asia. And then since then, it's been pretty lackluster, trying to rebuild from there. Pound similarly is showing, pretty strong weakness. Dollar yen is seeming to recover here intraday. So I would say for today, we're probably looking at euro short, and then maybe tomorrow you might get a chance to re-enter and go long.
There we go.
NFT is Thursday, obviously, just to remember for everyone.
Yeah,
I'm sure it's been mentioned a couple of times now already, probably, but yeah.
Exactly. TFT Mobile Latin America is going crazy in the chat. They use lots of okay.
I can't speak Spanish.
Yeah, I'm trying to keep up with what TFT. What is it you're trying to say? Because I'm making 60 pips on gold. Was my price to sell? My English is very little because I speak Spanish. Okay, 30 and my take profit in 15 minutes. The price created a new swing high in gold. I'm not sure I follow. Anybody out there, please explain.
It might be talking to someone else, I guess. Anyway.
Yeah, I'm not sure who he's talking to.
I missed the Jones comment before as well.
Gabriel saying, what about pound yen? Pound yen we were looking at earlier. And pound yen was looking good for buys, I thought, when we looked at it earlier. Hasn't really done much actually since we looked at it. I still think we can go higher. I think there's going to be a bit of a weakness coming back into the yen. You can see it. You see how your Bollinger Bands are closing in, so it's contracting down.
Tightening,
So again, a nice indication that we might see a breakout from that. Possibly going higher. What do you think?
Yeah, possibly. I struggle with the other yen crosses at the minute just because they are in kind of a mixed bag kind of situation. You know, because say whether it's the pound, it's the euro, whatever other cross against the yen you're trading, the general complex for them is heading higher. So then you've also got the converse portion of dollar yen coming off, and that has tended to, at like you'll see each of these points, if you go and check, it's basically dollar yen has come off and then triggered the other yen crosses to follow per the yen proxy portion. So at the minute you've got that, they're kind of battling each other out. And especially once you get the sort of rate differential stuff flattened out, then I can see higher moves. I think at the moment we're going to get a lot of sort of chop stuff in general. And so I'd be playing it sort of by the by, more using the other cross-correlated currencies as like an indicator to see if you can find a move on something like euro yen. So that's why I don't really like them too much at the minute, but I think the primary driver will be the dollar yen there. So hence I would just prefer to trade dollar yen itself.
Yeah.
I was just saying, bring this up because Sir James was saying this before. I saw your nice thing on NAS. Question is, are you prepared to hold indices into next month? I'm asking because I'm anticipating retracements as we start new month. I would say from here, we've got some pretty good just continual upside momentum, to be honest. I would not like fading this. I would prefer to, like, if you get a move like we did earlier, like last Friday here, I would be buying on those dips rather than trying to like say, where is this going to pause here and then find a retracement? Because it does, once we get into these kind of areas, like we broke this level here is like the all-time highs. We just kind of get this steady little like grind up and you get very shallow dips. So you're better off going on one of those dips and then just riding it the way up, preferably, I think. Particularly being that the majors, your sort of FANG stocks, or what are they now? What's the makeup now? We've changed from FANG to,
I don't know what it's called now.
Yeah, because we got like Nvidia and stuff in there.
Yeah.
Whatever people are calling it now.
It's all yeah.
Your big 5 to 8 big boys, right? You know, tech giants, that kind of stuff. They're still a bit underinvested after the dip. If you look at all the funds, pension funds, managed funds, mutual funds, hedge funds, they're still a bit underweight per what they were even just prior. And now you've seen these big runs. Assuming inflation stays stable, all that kind of stuff, which is the current outlook, these guys are just cash printing machines, right? So you get that, you get Trump's big beautiful bill stuff, which will be a shot of adrenaline to the economy. Longer term, probably not very good, but near term it will just, you know, set gasoline on things to a degree. And then so you'll get the Fed then reducing rates later, and however long that takes, or if we have to wait until Trump, you know, puts someone in, or at least starts indicating who he wants to put in, the market will start placing bets on that forward trajectory. And then I think that's where people are looking to now, is kind of where we are now, where are we this time next year? And so I think everyone's looking that, okay, chances are looking at this now, indices across the board will be absolutely on fire. So I don't think people are going to want to miss out. So I think through this next 3-month or so period, you'll probably see people pre-positioning for like the next 9 months out from this stage here.
Osgood was asking if you're looking at the NAS. He's looking at the NAS right now and he's saying, I'm in a sell right now. Do not scare me with your setup. Osgood, I mean, we were talking about this earlier on the ABL stream. Wouldn't be selling this right now. Wouldn't be selling this. Unless you're scalping, then fair enough. But yeah, I wouldn't be selling it. And I know
Yeah,
LJ definitely wouldn't be selling it.
It sort of just seems like we're going back into that sort of a bit of that pre-COVID phase where you get that kind of, where it was just the buy the dip type mentality, and you just get this kind of bubble up. It was one of the most hated bull runs ever because people were wanting that chance to get back in. And then it never really came off. Like, we had so few days that were even 1% down, right? And we just up. I think for now, that's definitely what we'll see. The obvious things that can throw that out would be, some kind of headline shock from Trump and that kind of stuff. That's definitely still on the cards. But for the meantime, it seems as though we've got a bit of peace and quiet. So given we've just broken all-time highs, I think there's a bit more in it before people, start trying to fade or call for downside protection via options or something like that. That's really going to drive that covering.
Yeah. TFT, lo siento, no hablo español on this channel, but we do have a Portuguese channel, and if there's enough people asking for it, then maybe the guys will figure out a Spanish channel. But at the moment, it is Anglais. I'm afraid. And Osgore is scalping, so there you go, Osgore. Then you should be all right, because as you can see, LJ is looking at the 1 hour chart, not at the 1 minute chart. So you might be all right with yourself. Davida is asking, after how many years of profitable scalping, 9 to 13% per year on average, can one consider mentoring? If one can consider mentoring with that performance. Thanks, guys. So, David, I'm not sure if you're saying that you are, I'm assuming, are you saying that you're earning 9 to 13% per year on average for scalping? Or you found somebody else that's offering you mentoring? I'm not quite sure I understand. But 9 to 13% isn't, I don't want to sound horrible, but it's not wonderful. If you're getting 9 to 13% profit on average per year scalping, that's a very stressful way to make 9 to 13%, where you could just stick it in an index and just take 10, 11% from that, right?
Exactly. Yeah.
I personally, if you want to be mentoring people and because you're a scalper or something, then personally I would say you need better returns than 9 to 13%.
For active management, you're going to be wanting something. You'd probably really, and because you got to consider after fees, taxes, all that kind of stuff. Because especially holding like an index or something, you can get your kind of 10-ish, call it your 8 to 13%, similar kind of measures on average. We've had other years, for instance, past 2 years, 20% or so. But then that in most countries as well, you get like capital gains discounts and stuff for holding the assets for over a year, that kind of stuff. If you're actively trading like that, you're just going to be at the full marginal tax rate. And then you're also going to reap up way more commissions, fees. So that also depends if that number is, I assume you're saying it's after commissions, fees, etc. But yeah, that is a very tough way to make that kind of return. So.
Yeah, 9 to 13%. If you look at the indexes, look at the indices, right? The NAS, the S&P 500, historically are all making about 10 to 11% per year, right? What you're describing is something that's high stress, potentially, drawdowns, everything else. That 9 to 13% in comparison, for put money into something and just leave it, or to go and scalp with adrenaline and dopamine and all these other things kicking in, which is the harder of the two? That's the thing to consider, right?
You probably want that rate probably per quarter, and then you'd more be looking at something reasonable at least, right?
Yeah, if you're doing 9 to 13% per quarter or even per month, then that's a totally different ball game, right? But you got to be doing that consistently, right? So yeah. Good question here from GT regarding fundamentals and applying it to the technical analysis. So 2 things on this, GT. First thing first, you should be signing up, if you're not already, into the AlphaBeta Lab. and signing up for the bi-weekly live podcast that we have with regards to fundamentals. So LJ and Dirk every Wednesday at 9 a.m. UK time, they do a live podcast over in the lab. So yeah, make sure you join for that, and they'll be talking you through the fundamentals. But LJ, in terms of his question of when should he start fundamentals, what's your thoughts on that one?
Yeah, you can also jump into ABL, our ABL stream every day at the start of London, because that also often, rehashing, updating a bunch of that sort of stuff as we go. So you'd be able to pick up a heap of things through there. As far as when, I would say macro fundamentals, that kind of stuff, right away. I would say even it's probably the basis you want to start before all the other stuff, personally, because that will help you better sort of apply. Yeah.
Sorry, can you just explain why? Because most people would look at the charts and say, right, I need to start with the charts. What is it that people are missing by going straight into the charts and not going into fundamentals first?
Yeah, so if you kind of think of trading a little bit like a science in a way, right? You're kind of build a hypothesis and then you submit that hypothesis to market testing, right? And the difference being, as a scientist, you get some kind of scientific truth, or potentially you've invalidated old scientific beliefs or something like that, and you build up a new theory, which obviously in science, a theory is basically fact, right, per se, until tested otherwise. So in the markets, obviously, you come out with a result of either a monetary return of either yes or no, essentially. So in order to build a proper thesis, or you want to design a science experiment, as an example, you would need some level of prior knowledge, which allows you to appreciably understand the result of your new testing, right? Because if you just do some random thing, you're going to get a result, but you'll be like, okay, what does that mean? So it is best to have some kind of prior knowledge, and then you test new areas that you're going into. So the other thing as well, if you go straight into charts or technicals, at the end of the day, the markets exist for a reason, not for people to speculate on stuff. They actually have a fundamental economic purpose and that sort of thing. And those are the main drivers of all the biggest players sitting on their hordes of capital, right? So you might be going in with text, that kind of stuff. It can completely work. Some people do, but if you want to form a holistic view, start with the macro and fundamentals, because then it'll explain when you go into text or you're trading stuff and you're testing your things, something might start working and you have no idea why, right? Particularly if you've just got a slight bent or a slight lean to the current market structure. Gold recently has been an example for the past year, 2 years, how we've had this kind of uptrend, and it's formed very consistent structures the whole way. And if you just kept layering into that, then you would have been crushing it. But as soon as that momentum stops and you get a consolidation period or more back and forth, you're all of a sudden going to start getting killed and not really understand sort of why that's happening. So that can be the same thing with NASDAQ stocks, currencies, all that, because the fundamental drivers are then, say, like interest rates, central banks. So it will just help you build up that theory. And the best way to put it is just start immediately. Don't think you have to learn all of it. It will be a gradual process where you just pick up one thing here, you'll connect the next dot and the next dot and the next dot. And the other thing with that then is, over time, you'll recall all of these things and you'll go like, oh, that feeds into that, which feeds into that. And then eventually it becomes this picture. So it's like putting each puzzle piece in.
Sorry to interrupt. So then how do you sell that to people out there that are just coming into trading and want to start making money now, and they don't want to spend all the time and the energy and the effort learning and reading and educating themselves? Because the reason I ask is because there was a comment from Jonesy saying, real question, is why are we having so many mentors popping up? Is society losing the edge to learn and earn themselves? I completely agree they are, Jonesy. But there is also, as Henri says, theory is not fact. Theory is an educated guess. That can be wrong, and it's not a fact. And as Oscar says, you know, analyst money without risk, right? So, you know, there's what you're saying to people is go away, learn it, understand it, spend the time, the energy, and the effort. You know, the guys are talking about it in the chat right here. You know, why are we having so many mentors? Well, first of all, there's so many mentors because, hey, you know, I mean, my parents were teachers, right? So I don't necessarily believe in this rule, but those who can't teach, right? Because they can't do it, so they teach others on how to do it because they can't handle the psychology, right? I don't try and teach people how to trade, even though I can't necessarily trade myself either, right? So probably I should go into education. Maybe that would be my way of making money. I simply lead an educational platform, but I don't provide the education myself because I don't have that corrupt moral compass to do that, right? But the reality is that, you know, that's why there are signal groups and all these other things where they will take money from you to give you what you think is the pot, you know, the pot of gold at the end of the rainbow, right? But the reality is that those signal groups and those mentors and all those other people are out there making money from people who want to get into trading or who are trying to trade because of the fundamental fact that people don't want to learn and earn for themselves, as Jones was pointing out earlier. So how do you convince the however many several hundred people watching right now to go out and learn things like fundamentals and that sort of stuff for their own benefit? What's the pitch?
Okay, yeah. So I guess the way to frame it is I would put it almost like, well, first and foremost, if you want to do anything like properly, there is going to be work involved, right? Always. Like that's just, you know, literally anything out there. Okay.
Yep.
I would put it kind of like, say you want to go use the gym analogy, right? You want to get fitter, healthier, stronger, all those kinds of things. You want to start at the gym. You have no idea what you're doing and call like actually exercising the technicals. And then you've got things around biology, nutrition, hormones, all the actual sciencey stuff is like fundamentals and macro. Now, which one should you do first? It's kind of like you should do both, but obviously through that lens, you know that if you just, I mean, how many people do you see go to the gym and you would look around and go like, do any of these people actually go to the gym? You know, how many people do you actually see really fit or really strong? And you'll see a select couple that are there all the time because they're like sort of the regulars and stuff. But if you took a selection of all the people that go there, there's going to be very few. Now, what's the difference there is normally they don't understand the fundamental parts, which is like, you know, nutrition being the first and foremost one. Then biomechanics, like how to actually stimulate the most amount of growth in an efficient manner, that kind of stuff. And then you can go deeper and deeper levels into like, you know, optimizing hormones, sleep, this, that, the other, right? So they kind of complement each other. You need to learn some of the core fundamentals in order to just be able to train, or else you're just going to be pulling random exercises and just moving around. Once you get that, you understand, okay, this is how you train triceps, this is how you train chest, this is legs, and understand kind of like, oh, your arm has a bicep, tricep, and you understand the different heads. Your legs like quads, hammies, glutes, and then you've got your calves. That then stacks and rolls into the next pieces. Unfortunately, just like something like the gym, it is going to take that work, it is going to take that effort, it is going to take that time. And so it's hard to, I struggle to give some kind of hot pitch because I don't really believe in that, because there really isn't one. You know, most people would be like, okay, I'm going to go start gym and start doing steroids tomorrow. That's the equivalent of people jumping into markets and going, I'm going to buy a course or get some of the signals and I'm just going to all of a sudden, you know, Lambo. So,
and that's it's interesting you say that. It's like, you know, that's exactly the same thing. Like one of the things I saw that's popped up lately here locally in Poland is EMS, I think it's called. It's like you do exercises, but you wear like a suit, like an electronic charged suit that's supposed to like pump electricity through you, and it's supposed to like you do a workout in half the time, or I don't quite understand it, but there's a whole bunch of places popped up around here offering that. It's like, okay, you don't need to go to the gym that often, you can go to this place once a week for 20 minutes, and I don't know.
It's a new hash of those that old, again, kind of scam fad type thing of like ab machines where you strap it to your core and it sends, like, trying to say that because when you activate a muscle, it sends electrical impulses, which tell a thing, right? But just zapping yourself, that's not the same. It misses the entire complex network of sending satellite cells which tell the myofibrils to then grow and, you know, all this kind of stuff. It's so you're missing a bajillion things with that. So that's why they don't work.
Exactly. And, you know, as Stephen quite rightly says, there is no substitute for hard work. The problem is when you've got things like AI, you've got things like social media, you've got all these other kind of, what's the word? Tidbits out there, you know, these kind of teasers, these kind of things that kind of give you an idea of, this might be work, this might be good. You've got all these temptations out there saying, well, here's the easy way out, right? Not really necessarily the case, right? And that's the trick, right? Is getting caught out by these things. So yeah, gold, interestingly enough, has somewhat stalled just within that wick. Now we are still only 15 minutes into the current 1 hour candle, where we bounced off before, but the previous 1 hour candle was an inside bar. So there is a growing sense in my mind that we might actually be going long soon on gold going up higher. But we will see. At the moment, it's still creating new lows on the 1 minute. We'll see how that plays out. But looking at longs on gold right now might not be a bad idea. We're respecting these 2 wicks here. We've got this long wick down here. What am I looking at on the 1 hour? Well, the 1 hour here, you can see we've got this engulfing candle to the upside. It's in this structure here that basically didn't hold. So I am still anticipating potential longs on gold from here. We'll see how that one plays out. At the moment, on the 1 minute, that has pushed slightly, but that could be the move. We'll see. If we break this structure here, not that one, that one, then it might be good for longs to take us up higher. As we both said earlier in the ABL stream, gold does look good for shorts. I'm not sure it's there yet. I think we should be going.
Yeah, not at the spot price. Yeah. So, and just to wrap up the fundamental macro whatever thing, just in totality. So first place to go, as Mike brought up, you've got ABL there, heaps of great content in there from a reliable, good sources, that kind of stuff. The next sort of thing you can do is something like Bloomberg is good to just have that on in the background. You'll start picking up how these things work, understanding stuff, and then if you hear something go like, oh, that sounds interesting, you can then just slap that into Google and start delving deeper, right? And obviously you got things like AI and ChatGPT to summarize things now as well. Do be careful with some AI stuff around economics and things. It tends not to be 100% very good. It often sounds good, and you'll think it's all correct, but if you've actually got the knowledge, you'll be able to spot so many things where it's just kind of gone off the wire. So
exactly. Daniel's in with us. Good to see you, Daniel. Those of you that missed it on Friday, the recording from Daniel's workshop that he did in the Discord, the 5ers Discord on Friday, is now available. Head into the 5ers Discord and you will find it there. But he's saying problem for most is that they can build a muscle with repetitive practices as they know that give results. In trading, you may build muscles by eating pizza only. the uncertainty to do the right things. And he says, quite rightly, hard work always wins if you do the right work, no other way around. So quite right. So yeah, we've got Cam in with us as well. No worries at all, Daniel. No problem with the spelling whatsoever. Maria is in with us. Good to see Maria. Sorry if I didn't see you earlier. But she's short gold targeting Friday's lows.
Where are you short from, Maria?
Yeah.
What level?
Because LJ and I were looking at, we were looking for shorts, but we were expecting us to come up higher from here, maybe into this kind of the 3.3 area, you know, the kind of the more rounded figure. But we only really got to 3.296, which wasn't quite high enough for my liking. So yeah, but let us know. Let's see what else we got. This is in reference to a comment earlier from Stephen. Stephen saying, what is the difference between gambling and a normal trading, and what is the disadvantages of gambling? Disadvantages of gambling, if done badly and whatnot, then disadvantages of gambling is you lose your money.
Not even done badly, just as a blanket rule. Like, it's 100% sure you will lose your money over time, right?
Gambling, if professional gamblers would,
but then they're not gambling, right? Yeah, because that's not gambling. Then
they're called professional gamblers.
Yeah, of course, but
without going into the semantics, the definitions.
Gambling
as a term, it depends on whether you're talking about the actual definition of gambling or if you're talking about the emotive topic of gambling, right? They're two very different things. If we're talking about because to take a gamble is to take a bet, right? And we're just going into semantics, right? And then we're simply saying that I believe I'm going to risk this amount to make this amount because I believe in this event is going to take place. So whether you're trading, I wouldn't call that gambling though,
because then you'd have to apply that to all of that, right? Like the same way you date someone, you're not going to say you're gambling, or you start a business, you're not gambling. You're taking a educated bet. Now
you're taking
the
a gamble.
How educated are you?
But you're taking a chance.
Chance.
Gamble is just that dirty word, right? It's just
exactly. That's what I'm
word
saying.
That nobody wants to be associated with, right?
Well, I just feel like the semantics in that sense are important, because otherwise it sort of becomes misleading to a degree, right? Because there's a difference between that and taking a very curated, intentional approach, right? Yeah. And you might not have all the facts or all the answers, but you definitely are stacking the deck, if we want to use a cards term for it, in your favor. But I think the point being that the mentality and the approach and the thought process, like you're saying about the emotional part of it, is completely different. Like a professional gambler turning up to the table is thinking completely differently to someone just going up, tossing coin out, right, and seeing what happens. Completely different, like, driver generally. So
professional poker trader and poker player, professional trader. I mean, thing is, we've discussed this in the past on this stream. We've discussed it on AVL in the past. The thing is that gambling is one of those things that just the word gambling, right? Just people don't like it, right? Because they talk about people who are there's connotations of addiction, right? And nobody wants to be called an addict. Nobody wants to be called, gambling has this kind of this dirty sense of, I'm doing something that I shouldn't be doing, right? But the reality is if you look down to the definitions of it all and you remove any emotional connection to the wording, it's all pretty much, the same definition, right? And we are all looking at it one way or another based on probabilities. Okay, so whether you're taking a bet on a horse, whether you're taking a bet essentially on price going up or price going down, there are ways to do it. You can do it of open up a chart and go buy, or open up a chart and go sell, and I'm going to sell now, right? And you could do the same with putting a bet on a horse. And, you know, that's where people, you know, who go and put a bet on the Grand National, you know, the big horse chase in the UK every year at Aintree, right? Grand National, people come in and they do a sweepstakes and they go, right, oh, I like the look of that name. That name looks good, right? So
Yeah, see, that's gambling,
right?
Versus
that exactly. But
exactly. Yeah,
the point is that can also be done in trading as well. If you just come in and go, ooh, that's a big move, right? Go. Yeah. So, you know, for example, I could turn around and say, right, gold has broken this low. Now, if I don't know what I'm talking about, I just say, oh, gold is selling, right? Lots of black candles, lots of bearish candles, right? I'm going to sell from here, right? So let's do an experiment, right? I'm going to put a sell there, right? Now, without any other context, what do I set? Do I set a stop loss where it is as a 1-to-1? Do I put a stop loss up here? Do I put a stop? You know, do I take a profit down here? That's where I'm talking about as a gambling, right? And this is what I did when I first got into trading, right? I used to look at charts and I should, it's going down, right? Sell, right? And that's where we're talking about, you know, gambling in terms of trading is a very, very difficult area to get in. Argentina, welcome TFT. Thank you very much. We've seen that you're in Argentina. Thank you. We acknowledge it. We see you. Thank you. And Abdul, you need to stick around to find out. But we hit 75,000 subscribers last week, so I'm sure Jonatan has got something cooking.
Later this week sometime. I think.
Exactly. And subscribe, and then you'll know as and when we're live. And whatnot. And yes, Jonesy, yeah, that's the one. But it's a weird one. It's like one of those health challenge things. You know, if you've seen like these platforms that say, 28 days to do this or do that. That's what it looks like to me. It's like they ask you to do a questionnaire and you fill it all out. But I don't know. It's I don't know. I'm too much of a skeptic these days. So we'll see. Exactly, we take a gamble crossing the road. Precisely that, Henry, sorry. And Venetia says, as Victor says all the time, ask why you open the position and check if you have something with consistency to justify the action. Otherwise, we'll be like my example. Yeah, exactly. All right. So you've got to have an understanding of what is it you're doing, why are you doing it, or are you just doing it because you want the thrill of it, right?
The difference is always how you define it is like, what is your level of information that you can have confidence in going into making said decision, and then you have the second derivative of that of how confident can you be in your own self in your assessment to qualify whether this information that you have is actually good or if it's rubbish. And
Davida's right, but I don't think it's necessarily in both cases. On a statistical basis, are you consistently profitable? With gambling, because of the whole connotation of it, gambling implies that you aren't analyzing it, that you don't even know the profitability, right? That's the general feeling towards it, right? That's why there's this negative connotations towards it. You call yourself a professional, gambler, then there is statistics involved, right? But at the end of the day, guys, you want to make money, you got to find your way to make it, and don't try and buy it from somebody else. That's my key take from all of it, I would say. Spider on the wall says, oh, he must be next to you, LJ. Your rule says orders can't be executed from 2 minutes before or 2 minutes after high impact news. Can you clarify where you can find your official list of high impact news? Different sources vary. They do. You can get it all from Forex Factory. So anything that is in Forex Factory as high impact news, that is the definition of high impact news. So the guys, they use a direct feed from Forex Factory every week of the news that's coming out. and this is what is pulled in. Okay, so there's no other source or anything like that. That doesn't mean though, so in terms of a high stakes account, don't place a trade 2 minutes before or 2 minutes after that news hits, all right? And it's news that's relevant to that asset, okay? So let's say, for example, you got Chinese news theoretically here this morning, right? That's not relevant to the high stakes rules, right? Because you haven't got the Chinese yuan as an asset that you would trade on the 5ers. But if you go into, for example, my FX book and you look around and you see and you say, oh, okay, all right, the German inflation rate is coming out in 30 minutes, right? That's not listed here, okay? But it doesn't mean that it might not move the markets. So even though the rules might state don't place those trades, everything else, first of all, you won't lose the account. You will simply not get any profit from any trades that you open in that 4-minute window. But also, if you're not keeping an eye on what other high impact news is out there, you can still lose your account just from slippage or over risking or spreads and all that sort of stuff, right? So you still got to keep an eye on the news because things can pop out from nowhere without you even realizing. So
and then the other place to check is the Discord, right? There's a channel in the Discord. If you have a account with the 5ers, you should be able to find in there where it's posted with the high impact news for the week. Every week, periodically, right? So,
yeah. Jones is quite right here. He says if trading is done without any clear discipline or control, my friend, you are in Vegas. Probability and risk management is what trading is all about. Jonesy's been trading for a long time, so I know that he's spent a lot of time kind of building this out, doing a great job on that. So very, very good there. We're supposed to make educated guesses, not randomly click buy or sell. Precisely that, Andreas. Precisely that. Could you take a look at Aussie New Zealand dollar? I was looking at a long entry about 1075. We were looking at this earlier today because my trusty strength scores were suggesting that the Aussie was weak, that the Aussie just wasn't looking any good. Don't know what happened. But yeah, he's looking at 1075. 1075. So you're looking at an entry down here. I don't think it's going to get that far. Is my honest opinion. That's just my own personal view. You're talking about price coming down to this level. Certainly I wouldn't be looking at that today, Alberto. Bearing in mind, even though we've got LJ in Brisbane, normal Aussies, they go to sleep at night time. Their market closes at night time, as does New Zealand. So even though we have the joy and the pleasure of LJ joining us, and even though he is the bank, the Royal Bank of Australia governor, I'm afraid I would say that the volatility in Aussie New Zealand dollar is probably not going to be sufficient to give you any real returns. And if you look at it, it's pretty rangy, right? It's broken out of this high, this structure here, broken out and pulled back down into it again. It does. I do like longs, but I wouldn't say it's going to come down to 175 or 1075. Is my own opinion of it.
I could even see sells, to be honest.
Yeah,
from like 107.85, looking all the way down to 106.80.
That's exactly what I was going to say. Yeah, I could see sells from this area here, from this wick. So yeah. Maria's got. When Maria posts a long comment, it's going to be good. Whatever we do in life, there is always an element of risk and a gamble. With trading, it's how you approach it. You have to treat this like a business. You don't become a surgeon overnight. Quite right, Maria. Quite right. You do not become a trader overnight. You don't become a surgeon overnight. Anything worth doing is worth doing well. Then, not sure what Davida you're referring to, but then you can open another chapter on how significant a statistical example is. But yes, quite right. trying to keep up with chat here. As an Sweat and Style, sorry. As an up-and-comer, I sure have learnt by trading without feelings.
Definitely.
Yeah, very, very important. And Maya saying, on gambling, I remember a quote from legendary Tom Dante. Trading is not gambling. Gambling is about hope. Trading is about execution. Gamblers pray for a win. Traders plan for one. Exactly. There's only one thing I would add to that quote. And it's at the very end where it says traders plan for one. I would say good traders plan for one. Because you can call yourself a trader, but you're still gambling, right? But if you're planning and you've got, your analysis, you've got all your kind of statistics, all those other things, then that gives you a far greater basis, right? And TFT, yeah, exactly. Precisely that. That's exactly what we were saying earlier. Australia and New Zealand are asleep right now, so there's not going to be much movement in that one at the moment. Let's go have a look at Bitcoin, shall we? What's Bitcoin doing today? Bitcoin has come back down to this little area on the 4 hour, and could start slowly creepy back up again, going for the 110 area. I don't know if it will happen today, but after that dip that we had last weekend because of the Middle East instability, we bounced off that quite nicely and now heading higher once again. So looking good for buys on there. Are we going to read all the comments? Which comments are you referring to, Cherry? Let us know. Nope. I don't know what you did to me there. LJ says run to the toilet. We try to read as many comments as we can, but I can't keep up with all of them. So yeah. How much skill you need to put a trade? Exactly 0 skill. To put on a trade, no, you don't need any skill. To make money from trading, you need a lot of skill. You need a lot of discipline. Still my funded, or I still wait my founded certification, and after I will update the post on ABL with the replay of phase 1, phase 2 on high stakes for this funded account. Excellent stuff. One more from Maya. Gamblers chase luck, traders chase edge. If you are hoping for a big win without a plan, you are not trading, you are rolling dice. Quite right indeed. Whilst LJ's not here, let's go and have a look at the strength scores then. So today, at the moment, real time, we have got the Swiss franc showing a lot of strength today and the Aussie showing a lot of weakness. This is one of those assets that is quite amusing for me because LJ constantly jokes as to who is exchanging Aussie dollars for Swiss francs. So let's go and have a look. Let's see who is exchanging Aussie dollars for Swiss francs. Well, on the 4 hour, we're seeing more bearish momentum coming in. We're coming back down on this daily move. We had, let me just delete that fib from there. So we had this big push down. We've come back down to 38. Looks like we're probably going to be pushing further down. You could argue that we have come the other way. So we've had this break and we're maybe going to sell off further. Don't know. We will we'll wait and see. But here comes LJ. He's coming back in a second, so we'll ask him. LJ, what do you think about this pair that's not a pair that you and Anastasia were teasing me about the other week? Aussie Swiss franc. What do you reckon?
I mean, definitely looking bearish. Just there, obviously. Yeah, I guess it's just one of those very illiquid pairs. You know, there's not much like trade or anything between Aussie and the franc, right? You know, so you're just going to get funds, that kind of stuff, running algos, bots, whatever, in there, sort of trading it. So it sort of just tends to follow along the rest of the Swiss pairs, just by proxy. But yeah, definitely bearish at the moment. Point of note, obviously, with all the franc pairs, Swiss National Bank has touted a couple of times now, sort of giving a bit of pre-warning that they are looking to start intervening in FX markets across the board. So, that's just something to be wary of, because the Swiss franc is still strengthening very hard, even though they've brought rates all the way down to like zero. And they're trying to get out of that negative rates aspect. Still many people buying the franc for safety and that kind of thing, given everything going on, just like gold and stuff. And obviously it's a bit more favorable to buy than the yen, just given the country dynamics. The yen as the safe haven has somewhat fallen out of favor. But yeah. So still seeing more of that, but careful.
Yeah.
That's what I'd say.
Yeah, exactly. Other than that, against the Swiss, also potentially the pound Swiss is maybe one to look at today. So let's just pull up that one. Again, we've also got that big move. We've broken lower. I would say we've still potentially got some lower levels to come down to on the pound Swiss. It did react off this big wick here, but I still think we've got some more movement to come in. But what do you think, LJ?
Pound Swiss, I mean, similar deal. I would be, so any of these lower levels, we can clearly see we are still sort of shifting lower. It's quite bearish. Same with the Aussie franc that we were looking at before. I think down in that lower cluster there, across the board, that's sort of the areas where the Swiss National Bank would start to look to buy. They often do that around critical levels. They're very much like trading it, right? So they're actually watching charts, structures, that kind of stuff, to try and build up those technical levels to support their going into FX markets and intervening. Because obviously intervening for central banks is a very fruitless effort most of the time. It gets front run, everyone knows all this kind of stuff. So the other part with that, because of that, they're always having to try and do it kind of secretively. And then you'll find out later when they give out the prints of their current account balances for all the currencies, that kind of thing. You can see the distinct shifts across the board there. So, but yeah, for now, bearish. Again, same as Aussie franc. Probably is a bit more in it to some of those lower levels, but it's just once we get down there, I wouldn't be betting on further collapse. Unless in the event that they want to see that, get that squeeze and then burn people, right? Which has been quite common.
Yeah, exactly.
Particularly see that in Euro franc often as well.
Yeah. TFT, I am so sorry that we have nobody else speaking Spanish. I know you're very sad chatting solo, but this is an English-speaking channel. But if you want to find Spanish speakers, then rustle up some other traders and head on into the Discord and propose it. We have a Portuguese channel because Pedro, one of the hosts on the The5ers live stream, suggested it. And there's now a Portuguese YouTube channel. So there's no reason why there might not be one for Spanish speakers as well.
Henri.
He's not wrong.
Yeah, look, a bit of caffeine. Yeah,
he's not wrong. Tiago, good to see you, Tiago. You guys look at CAD, JPY. I'm looking for buys if we can close above 106.26 on the 4 hour and buy on the next pullback. We were looking at this earlier, I think, if I'm not mistaken.
We did.
It did have this. It did have this really nice break and retest eventually on the higher time frames. We looked at this earlier, and I can on the 22 hour we've got this level here that I expect us to come and take right now. If we look on the 11 hour, we've kind of rejected off. It's a little bit of a tricky one, this one, because you've also got this candle here that opened without a wick. So for me, it's a little bit of a funny one, because if you consider where we are now, right, we've broken this structure here. So theoretically, on an upward trend, we're pushing higher, right? But if we then take a lower trend, a downward trend, we're kind of at this inflection point, right? So I'd be in two minds about trying to trade CAD JPY, because JPY is showing strength, the CAD is showing weakness. But if that's the case, then you'd be looking for sells. But does that, on that upward trend, on that bullish trend, does that look? I don't know. I don't think that necessarily looks entirely bullish. So, but I don't know. What do you think, LJ?
I think you might have a slight more upside. It's similar to Euro Yen, Pound Yen that we also took a look at earlier this morning during the ABL London Open. I just don't like where we are given dollar yen. Dollar yen is obviously having a bit of a move higher today as well, and it's very much in sync with that. But what we've seen is dollar yen tends to be the trigger that will kill the rallies, right? So even if structurally, technically, whether it's AUD yen, CAD yen, anything else like that, they're looking very healthy, dollar yen will find its sort of peak point and then rotate very quickly and then just kill the moves for all the rest of them. So if we go like Euro Yen here, similar thing, like I can easily see a bit more movement up to that kind of 169.50 kind of area. And you've got dollar yen as well here. This is sort of either where we'll cap out, or again, similar, you get to 144.60 odd. But you can see how through here, like dollar yen looks a lot more, got a lot more wood to chop, right? Sort of struggling through here. And we've seen these consistent, just very, very happy to sell. The market is, right? On any kind of these retracements, sell again, sell again, sell again. So that's what I would say as far as CAD yen. You've just got that exposure there that you have to be aware of, where you can get knocked off very easily. And you can see here as well, we've got kind of this gradual, lower highs and that sort of stuff through here. Lower after that peak blow off right there. And then you got lower, low. Today, we're just kind of in this middle point. So it's not really very clear, but I would say maybe you can get another 20 points or something on there. I wouldn't be looking for too much of a drive up through here just yet, through the rest of the week, particularly considering we got non-farm payroll, right? So, I mean, that's going to rock the dollar, and you could easily see it come off.
Henri's saying there's for some reason my trading view is completely frozen, but he's saying NAS is forming a nice triangle on the 5-minute time frame. If you want to pull that up, whilst I try and figure out why my trading view is completely frozen solid.
I can't shift this whilst that thing's there. There we go. Yeah, a little bit. What kind of triangle are we talking about? Like this kind of guy here, and then move up, something like that. As far as like scalps, that kind of thing for today, or just intraday stuff, I'd be going long until a bit further up here, 22,750, and then potentially look for a little bit of a move back lower. I think as far as probability distribution from options on the cards today for the NASDAQ, fair mid price should be 22,500. So we're kind of sitting around there right now. So that's fully just in the expected move for today, as far as options expiring today are. And so you can see we're just a touch above that now.
This is on the 1 minute time frame. Then, if you're going to look that far, I thought it was only I did the 1 minute time frame, Henri. Didn't realize you're trying to get LJ to do it as well. Yeah, it looks like it's breaking out of that triangle formation on the 1 minute. So
hence, given the options, I can kind of see something like that move a little bit higher up to here, and then potentially being keyword, pull back towards that middle expected band. It's been pretty quiet so far. I expect rest of the US session to be pretty quiet today as well. So,
Cosmos, no, it's not Elon Musk. Elon Musk is from South Africa. LJ is from the land down under in Australia. But yes, it is not the first time that he is.
It's such a strange phenomenon, isn't it?
I don't know where this comes from. That you sound like crazy. I don't get it. I don't see it, and I don't hear it. But everyone else seems to think you sound like Elon Musk. So we call him Elon Mush instead.
Yeah.
So yeah. Chartron, does it make any difference if I enter 5 lots on a scalp trade in a 100k account, or I enter 5 lots on a swing trade? Yes, it does. Well, it's a difference in terms of your risk, right?
Yeah.
So that's the reality, right?
So if you're running the same risk with 5 lots on a swing trade, you assume like it's going to change the distance of how far you can put a stop whilst risking the same amount of capital. So typically on a swing trade, you're going to want a stop of something of like at least 30 points, often up to 80 or 120, depending on how you're structuring it. Is this like a 1 week, 2 week, or 2 month, 3 month plus type thing, right? So if you're doing that with five lots on a scalp trade, right, you're going to be able to put a tight stop. So it's going to be a very small loss. If you're running the same lots on like a 30-point stop or something, massive compared, right? You're going to be, say if your scalp trade had like a 4 pip or 5 pip, or maybe some people do 3 or less, then you've got 30 on the other one, you're potentially 5 to 10x the risk exposure. So
Dirk's in saying it's always comforting to see LJ's chart drawings looking as good as his, as if drawing capabilities stopped developing in elementary school. But the thing is, Dirk, that LJ swears that his trend lines, as wonky as they are, that they're like the mare indicator. That's the mare indicator that Jonatan has. That's kind of what we're looking at here. So
look at this. Here we go. We got up here Picasso. It's beautiful, isn't it?
Yeah, absolutely. And Cobus, we have looked at gold. Gold, neither of us are overall long on gold. We're looking for shorts, but from a higher level than we are right now, is essentially what we're looking at. Gold hasn't really done much since the moves in Asia, and it's now kind of just sitting, having created highs towards the end of the Asia session. It's now just sitting in this kind of the middle of the range sort of section. So I'm personally looking for us to go higher and then look to sell probably from around about, I would probably be looking for around about the 3,300 area. If not, then around about the 3,320 area is kind of what I'm looking for. If I was to look for sales.
Yeah, these would be the two kind of boxes that we're looking at potential sales. If we did run through above that 3320, it's sort of like 15 to 20 kind of area, then I would start questioning it altogether. Because then you could definitely see some further momentum through here, pause here, and then back up to 3,400, right? So I'd be getting very like question mark over here. Beautiful absolutely. Question mark, that one.
I see it's no hat Monday for LJ. Yeah, he's cut his hair, so it kind of itches on the back of his head a little bit, Fabian. So we can't give you hats every day, otherwise they lose their charm. So hats come out when when there's a need. So yeah, but yeah, Cobos, hopefully that answers. Hopefully that answers your question, Cobos. It would be remiss of us if we didn't, whilst we were here, just to remind all of you guys that you can join us over in the AlphaBeta Lab. The link is on your screen right now. It is completely for free, and it is the only community that I'm aware of that is completely for free, where it's built by traders for traders, where everyone comes in and shares their thoughts and their ideas. We've got the day traders desk in here with the likes of Jonesy and others who are all in there, sharing their trade thoughts and sharing their trade ideas. So as you can see here, you've got Raphael sharing his thoughts as well this morning. So loads and loads of thoughts, loads and loads of ideas, things like that all in here. And it's all completely for free. So we are available. We are doing live streams every Monday to Friday. We are Monday to Thursday, 8 a.m. UK time, and on Fridays, 11 a.m. UK time. So you can catch us there, whilst we've got our own little slot here on the 5ers stream, and we are very grateful for them allowing us to do so. So yeah, we got Nora in with us. Nora, I don't know if you've been sat there stalking us, or what's the word? Not stalking. Lurking. What's the word? Lurking. That's it. Yes. I don't know if Nora
said hello when we came in.
Did she? Oh, okay. My apologies, Nora. I didn't see you.
Nora definitely did.
But good to see you, Nora. Backtested London Open 15-minute candle breakout strategy on gold yesterday with great results on both spot and futures. Won live trades as well this morning. Excellent news. Lovely to hear it. Louis says that he's put his EA results in the AlphaBeta Lab, although still early days. As Dirk quite rightly says, join AlphaBeta Labs, guys. It is well worth it, and it's free. I mean, it's free, so that makes it surely worth it no matter what. And you've been busy setting up her TradeZeller account. Interested, Nora, what you think about TradeZeller? One of those journaling platforms out there. There's more and more of them out there, but I find all of those trade journal platforms really, really expensive. The monthly subscriptions are not cheap. But
I haven't looked at each of them personally.
I know I'm
not too sure.
Curious what
Edgewonk and stuff, but
there's Edgewonk as well, but they're all really pricey. What I've discovered when I did my own research into this is that one of the reasons they're so expensive is because they have to pay access fees to all of the different MT5 servers and all the other broker servers and everything else to automate your journaling, right? And that's where they then pass on the costs. But looking at it, it's a lot of money. It's like $50-$60 a month. And I'm thinking of all the traders out there, who are just trying to get started and everything else. Even if you're in somewhere like the UK, there's still a lot of money to pay. But then if you go into somewhere like, I know we've got a lot of viewers in India, we've got a lot of viewers, all over the world, paying like $50-$60 a month for journaling is just crazy money.
Yeah.
So yeah, but we got River Runner saying Stonk Journal is free and great. Just drop the guy a coffee. It is not automated though. Yeah. See, that's the thing, River, is that I've discovered when I read into this, if you've got a journal that you have to do manually, people are much less likely to do it. If you can automate some element of it, then you're more likely to get the success and the benefits of it. But that's part of the problem, is trying to get people to do things manually is the really tricky part. And Jonesy says that AlphaBeta Lab is his journaling platform. It's not a bad way to do it. And Dirk is saying, get Claude Code or Claude projects and develop your own journaling software. No need to pay for this anymore. Shh, Dirk, don't say that. I'm building my own journaling platform using Claude Code that I wanted to sell. Dirk, what are you doing? You're just killing me here. Come on, man. Oh no, my little side hustle that I'm trying to run here, and Dirk's just telling everyone the secret sauce.
That's right. You just got to get onto the Picassos. Like, Dirk was saying. You know?
Yeah, exactly.
The chart drawings will be sold for millies down the road. So there you go.
So there you go. One last question we've got. Would you say the DAX is still very much bullish, or could it possibly retest the 2340 mark? My trading view is still not working. So if you want to pull up yours, LJ, on the DAX, I'm looking at the moment.
Ali, pretty.
Can't get it open. Can't get it open.
I mean, looking at the daily immediately, I would say yes. We could definitely come off some. 2340 though. I can write down here. I'd say you'd be looking more like 23,600 or something, potentially as a retracement point. I think 2340 would be probably a bit too far. I could definitely see us coming down basically into this pocket somewhere through here.
Yeah,
I think coming right off down there is probably a bit low for now. Obviously, the US indices have a lot more strength at the moment, a bit more momentum, but generally they are leading up all the other indices across the board at the minute as well. So I would still continue to bet on that further upside momentum with pretty shallow dips from here on out. So
okay. Alrighty. I can see we've got Dr. Deanna Cole sitting in the background, just getting herself ready for the next segment of the live stream. Not sure who's joining Deanna on today's segment, whether it's Victor or if it's Jonatan. Maybe if we say their names loud enough, they'll hear us, and they'll be jumping in as well very soon. They shall appear if we say Victor, Jonatan. Then maybe we'll summon them like a genie in a bottle. Who knows? But we'll see. Meanwhile, in the chat, Blitz007 is saying, how do you handle a trade that is almost close to ticking all the boxes, but one single thing is missing? Do you enter or let it go? That really depends on whether you want Jonatan to answer it or whether you want me and LJ to answer it, because Jonatan is ready to answer you. Hey, Jonatan.
Hey, what's up, guys?
What's
up, man?
What's the answer to the question?
How do you handle a trade that is almost close to ticking all the boxes, but one single thing is missing?
I would say how many boxes you have, and then of those individual boxes, which are the like more core components that are, you know, you put more weighting on versus the other surrounding ones that are just complementary.
Exactly.
Right.
Then why do you have the other
it's
boxes?
just one of the side complementary ones, you can probably take the probabilistic chance. But if it's like a core component of your strategy, then, you know.
But then why do you have the extra boxes unless you have a dynamic risk? Like if you have a dynamic risk management based on the criteria, then that makes sense, you know. So yeah, okay, those two criteria are active, so I'm going to risk 1%, and if you have four boxes ticked, then you're going to risk 1.5%. But if you're not having a dynamic risk approach, then whatever setup you take, then that should be the criteria. If you need more, if you have more boxes to tick, then like why have those extra boxes if you're not going to wait for them? Then you could just take every trade that has the initial, the minimum boxes required.
Yeah, Jonatan, how's totally unrelated, Jonatan, but how's homeschooling going? just had a little pair of eyes just pop over your shoulder a second ago.
Well, I'm a little bit tired. I gotta admit.
How is your son tired? That's more the question that you'll be asking yourself at like 7 or 8 o'clock tonight.
No, he's not tired at all, obviously.
Yeah.
But I feel like I feel like I've slept like it feels like I've been running a weekly marathon, and then I get back to work and I'm exhausted.
Yeah, I know the feeling, my man. I know the feeling. Oh dear. Anyway, that is it from us for this segment. We shall leave you guys to it. It is always a pleasure. Jonatan will hand over to you and Deanna for the next segment, and we will see you guys again tomorrow.
Yep.
All right.
See you guys then.
See you guys.
Cheers, guys.
Cheers now.
All right. Hey,
Good
Deanna.
morning.
How's it going?
Hi, I'm doing well. How are you?
I'm good. Good morning. What time is it at your place now? It's let me
8
guess.
o'clock.
Let me guess. It's
Oh,
9. No, it's not 9. It's 10. 10 in the morning?
A little earlier. It's 8 o'clock. A little after 8
really?
o'clock.
All right. Wow. I'm glad I don't have to start the live streams at 8 in the morning.
That's not so bad.
Nice.
Good morning,
All right,
everyone.
so I hope that you have a long position on the S&P 500.
I sure do. Mostly
Nice.
take profit, but I do have a runner on, and we'll be holding that runner for a bit, hoping to see a little bit of a flush this morning, maybe if we get lucky this morning or at some point, so I can enter on another account, but it just depends on what we see. We're so close to all-time highs, which is always a interesting place to be. And it's been a wild couple of weeks since, what was it? June 23rd has been just an absolute launch pad. So it's been great to follow along. Thank you so much for all the hellos in the chat. Good to see everybody. Great weekend. I hope everybody else had a great weekend as well. And Jonatan, you look like you need a weekend.
Yeah, I was off. Been on vacation for a week, and I feel like I need 6 months extra vacation. I would like to take like maybe two vacations a year.
Yeah,
6 months or something like that would be good. You know, one in the summer, one in the winter.
My husband and I always joked, when you have kids, you need a vacation from your vacation.
Exactly. It's like every year. So usually what we try to do is we try to do like two vacations in summer. So we usually go to the west coast of Sweden. It's like we get this place we usually go to, and the first vacation is always like a total mess because we always forget about all the things that we promised not to do the second vacation last year, right? So we made a list of things not to do, you know, and so next vacation is going to be let's try to just do nothing, you know. Let's just try to keep the kids occupied, and let's just not do anything. So let's get a house with a trampoline, maybe a pool, you know, get a house with a pool, and then we can just sit and watch them, you know.
It's a great idea. That does sound like a vacation.
Exactly.
But not how it went, huh?
Yeah, I am not the inner, you know, I don't have the energy that I usually have. I feel like I just need yeah.
That's parenting.
It's
brutal.
It is. But it's, you know, it's all worth it. I mean, the good times are so much better than you could ever imagine. If you don't have kids, like watching them grow up and watching them learn new skills and things like that is just, it's every day's a miracle with the kids, really. It's amazing.
That's true. That's a good mindset too. My oldest son told me he doesn't want to have kids, and I said, well, hopefully you'll change your mind, but why is that? And he said, they cost way too much money. I was like, well, you are not wrong on that, but what a great best way to spend your money is on your kids.
Of course, there's more to life than money. I mean, And that's something I've had to realize as well with all the job I'm doing and when we're trading and everything. It's you really do have to at some point prioritize your kids and think, time, money without time is nothing. I mean, if you don't have the time to spend your money on things that is worth it, then the money becomes meaningless.
Yeah.
So yeah, it's
and you're in the difficult phase too. Your youngest one is elementary, I think.
Yeah, 7.
So it gets way easier. Mine are all preteens and teens now, and they're still exhausting, but they're fun. They do fight a lot more than they did when they were little somehow, but they're not it's not as much effort,
Yeah, but then when they fight at that age, it's like, yeah, well, gotta
go work it out.
Work it out, I guess. But no, I do feel like I'm super blessed to be able to be here, do the live stream. He's playing with his Lego, having fun. It's good weather outside. We got a nice house with a nice neighborhood. He's running in and out whenever he wants. So, I mean, it's definitely, some people definitely have it worse than I have. So, not really something to complain about.
Yeah, looks beautiful out your window too. Looks like a beautiful sunny day, and
yeah, it's very nice. The lighting here is terrible though. Like I do look.
Oh, it looks good. It looks good.
All right. Well, thank you. Well, I'm happy you're not honest. I'm okay with that.
So I would love to hear. Does this mean that you are fully not trading for the week? So obviously you have responsibilities with the 5ers that are outside of trading, but does that mean that you don't trade for the week either? Or how do you handle that?
I trade. I mean,
okay,
I do trade, but I try to limit it to the live streams, and honestly, not very actively. But it's not about the commitment with the kids and everything. It's more about the way I'm feeling mentally today. As I'm trading, if I'm trading discretionary, obviously I want to make sure that I'm on top of my game from a mental point of view, because the technicals, it doesn't matter if I'm super tired, I can still look at an uptrend and say that's an uptrend. But the way I'm going to enter a trade and manage that trade, I need to be sure that I'm able to not get stuck in a mindset where I'm like, okay, my idea is invalidated, but I'm too tired or lazy to act on that information. A lot of times I get stuck in a trade where it's like it's running against me. I know I should exit, but I'm in that mindset where I'm like, I don't care. Let's just let it hit that stop loss. I don't care, So I think it's more about waking up and understanding that, okay, if I can't switch this mindset around, then I better just take a break from trading.
Yeah, that makes sense. That's every day, really. Not just vacation days, but definitely every day, because there are some regular days at home where you wake up. A few months ago, I woke up and I was extremely sick with the flu. And luckily it was the weekend, but I always thought, if that would have been a Monday or something and I didn't trade all weekend, would I have been smart enough to say, hey, it's not I'm not able to do it today? Or would I have tried to trade through it and, done some damage? But luckily it was the weekend, so I didn't have to test that out.
Yeah, no, it's that's also one of those things where you get sick or you get the flu or whatever. It's better just to take a day off or two, or in some cases a whole week, like you would from a regular job,
Somehow go ahead.
Yeah, okay. I want to talk about the S&P 500 because I'm looking at it right here, and you said like we're close to all-time highs, but the way I see it is the daily candle is above the previous one. The previous one was an all-time high. I would say that we are pretty much at all-time high today, looking at the daily structure, and it's I wouldn't say it's surprising, but it kind of is in a sense. I did not expect for the weekly candle to close into in all-time highs after such a momentum move, like strong momentum move, and then Monday opening and continuing the run that we had on Friday. It feels like there's really, I feel like a lot of people are on the sidelines on this one, and more people are now getting into the market because of FOMO, and we're going to see more of that, because I think not only retail traders are showing signs of FOMO, I think hedge funds, big players, are feeling the FOMO, because there's been so many reasons not to be long the market, to buy the market here, but it's just been rallying. It's like it's been proven everyone wrong. Well, a lot of people wrong. So yeah, it's going to be interesting to see how this momentum is going to play out here throughout the session. Do you have any plans on any plans for today in terms of trading?
Yeah, I've been trading a lot during the Asian session. There have been quite. Can you hear that construction? All of a sudden, there's really loud construction. I'm hoping you can't hear it.
I can hear it. I can hear a little bit of it, but it's not too bad.
Okay, good. I have been trading a lot during the Asian session. They do tend to be a little bit quieter. The Asian session does for the indices, but there have been probably at least 2 weeks now where it has just been such a great quieter entry opportunity. And so I've been doing a lot of that. And then maybe kind of jump around in my accounts, and I'll be trading today as well. So if I were to get long here, I would like to see a really strong flush. We did get a little bit of a flush where maybe traders took an opportunity where we had this hourly swing low, price came below it, and then now has pushed above. This wasn't a super strong move. And so it will be interesting to see what happens at the open if we get kind of a bigger move where it flushes back down. So this pink line here is the previous day high. If we could get, really solid flush, that could create an opportunity that would not be necessarily chasing, but I would definitely want to see it flush before I get in on a new trade there. So as far as people being on the sidelines, it makes sense. This is the daily here. And if you look, since mid-April, it has been just, wow.
Okay, yeah, that's that's a bit bad. Okay, so yeah, so we're saying we got 1, 2, 3, 4, 5, 6, basically 6 daily bullish candles for the S&P 500, and I think it's 6. That's a doji type of candle, but it's still a bullish one, I would say. So are you doing constructions in your house?
No, I'm traveling this week, and I was told.
Right.
I asked yesterday where would be a good quiet place to go, and they said, "Oh, just go down." Told me where to go, so I went here. She must have forgot there's some massive construction literally right behind my head. I can feel the wall vibrating.
Oh, wow.
So I am very sorry about that. It was quiet all morning down here, and then all of a sudden I might need to actually move spots. I'm so sorry about that. But
don't worry about it. Don't worry about it.
It makes sense that traders were a little bit spooked off by this move because, we have been in an uptrend for a very long time, and it's easy to forget that markets do go lower. And not only do they go lower, but they can really, really crater. This is a pretty scary move here. The indices were at all-time highs, but then dropped 22%. Now, it can definitely get worse than that. I mean, you could see a 33% drop. But this is a lot. To me, it looks very similar, not very similar, but I remember when COVID happened, looking at the market going, okay, I want to get back in at some point, but you got to be careful and cautious. And it seemed like the market actually did the same exact thing, this V recovery where it just absolutely crumbled. And then we saw, a straight up V higher. In fact, we might even be able to see it if I scroll over here a little bit. And I remember that also being right here it is. Just absolutely crumbled. And then the recovery was just smooth and, beautiful. This was a 31% drop, and, it went straight off the cliff, but then just recovered like nothing had happened. And I remember thinking, wow, I really did not trade that super well, because I just did not expect this, beautiful V-shaped recovery. And in a lot of ways, that's kind of similar to what we have right now. It's this, a drop, a little bit of a recovery, and then just an absolute free fall. So if you are a new trader, these are two spots that you want to remember. They don't come very often, right? The last one was 5 years ago, but this is something that you want to remember and sort of like bookmark in your brain, that this can be setting up a really good opportunity. Now, you don't want to be seeing this happen and like go all in here. But even on your long-term accounts, that is a scary place to take a trade. But when you see a move over 20% lower and everybody is saying the world is coming to an end, that's kind of a time to perk up your ears and think, or is it, what is the precedent for this? What has happened in the past?
I was definitely on the wrong side of both COVID and this one, because I remember when COVID came along and we had that move to the downside, I did feel like this is something major. Like, this is something major going on, and I'm not sure I want to be buying this market. And I thought the exact same way now with the tariffs. Like, okay, this is something major. We have a complete shift in the world economics and the way that people are looking at the US, and the way that the US is going to be involved in international trade. So I thought, okay, this is not something that I want to be buying. And the issue is, when you have such a strong high time frame move to the downside, where it's literally just almost a straight line to the downside, you need to recover. You need such a big gain to recover lost levels. And at the pace that happened during COVID, I remember thinking that, well, this is a bit too good to be true. So, better wait for that retrace, because a move like this to the upside, it has to retrace. Like, it just can't go straight up to the upside. And then it did. It went straight up, broke into new all-time highs, and then just continued. And we look back in COVID, then we're like, well, that is ages ago. We're in the exact same scenario right now. We looked at the Trump tariffs, big move to the downside, started recovering, and I'm like, well, this is too good to be true. We need to retrace. Let me get in on a major retrace. And no, it never happened. We just went almost straight up into new all-time highs on the higher levels. So I feel like that's saying, buy when there's blood in the street. This is the two opportunities to do that, or was the two opportunities. But even though I think about that quite a lot, and I wait for an opportunity like this, I did not act upon it. I was too focused on COVID being too much of a paradigm shift, just like with the tariffs. And I was too focused on the possible recession this year in the US with the tariffs, that I needed more confirmation to go long. And just missed out on a big, and the people that just buy on a regular basis, those are the ones winning this market. The ones that are just buying a set amount every week or every month, those are the big winners here.
That's true. I think, especially for long-term accounts, but it doesn't have to be that way. There was opportunity in this market to wait and still get paid. So, if you are somebody who is like, again, I would say, remember these times when it just seems like the world is coming to an end, everything's in a free fall, and, just kind of use that as a cue. Like, is it? What's going on here? Because even if you sat out from, let's say, end of March, beginning of April, and then you saw this, let me make it a little bit bigger, this huge recovery here, that was a giant day. And to me, that is something that I want to be paying attention to. Not that it's totally over, but okay, that's 13% move high to low this day. That's an incredible move. And after that happened, it makes sense that the market says, okay, I got to chill out a little bit and then move on again. And so I think COVID was a little bit different because, at least for me, and I think for a lot of folks, it was kind of like there were other things besides trading going on that were really, kind of interfered with your ability to, we're worried about, like, are our kids safe? Are we safe? What's going to happen? Can we get toilet paper? Can we get food? There was a lot going on in COVID that made it hard to kind of, think clearly and see the market clearly. But I do think that it's important to remember that when the world seems to be coming to an end, we gotta think, okay, maybe I need a break, and then start to look at what the market is actually doing. And there were two giant tells here, I think, that were really, really important. And we've been talking about this for a while now, but this gap up move here. So the market closed here on April, end of April, and left this big gap. Now, typically gaps are filled and you don't see a gap get unfilled. So this was, I know for me personally, I kept waiting. Okay, when's it going to fill? When's it going to fill? This was a Tuesday to a Wednesday. So a midweek giant gap. And then we had another smaller gap here. So another gap here, still never filled that other gap. And then on top of that, we had this other gap here that was never filled. So we're starting to stack up some major, gaps that are showing a lot of strength in the market. I think the daily time frame, even if you're a day trader, is really, really important to pay attention to, because this was a really, really strong tell. These gaps were not getting filled, and they should be filled because gaps typically always are filled. So now we're in June. So end of June, I think, is tomorrow, July. We've gone all the way from April to July, and price never got back to these gaps. I guess this one was mostly filled. The very bottom wasn't filled. But this one was fully unfilled. This one was fully unfilled. And the market has moved just higher and higher towards all-time highs. So there were definitely tells here, I think, that showed, no kidding, the market is strong. And every time we saw a really good dip below, like I like this one right here. So if I can highlight this a little bit better, this to me, I was pretty excited to see. So we had, there we go, right here. So we had this move here, send it back. We had this move here where we had put in, again, a kind of like mini uptrend. It wasn't super strong, but it was, churning nicely higher on the daily time frame. Put in a swing low. I don't believe that this swing low undercut this one. So now we have a swing low here and we have a swing low here, and the market's not really doing anything, definitely in kind of a consolidation type area. And then we get a pretty decent gap down. This was a Monday. So a week ago Monday, we got a gap down, which took out, the liquidity under this swing low and this swing low. And price, I don't know if you traded last Monday or Sunday evening. For me, it was Sunday evening. Just absolutely ripped higher from here. And even if we can switch to a smaller time frame, oh my goodness, it's a lot of lines.
That's a lot of levels.
What was that? The 20 right here. Okay, I see it. So
now, what are all those lines?
Well, it looks crazy now, but it's just different levels that I have marked off that are areas of significance, but it looks crazy when you see it like that. I'm not using those levels all the time, but sometimes I don't delete them. So they stack up
okay.
pretty
It's just
heavily.
levels that you've added, and it's like
yeah, they're kind of like, in the past now, but they don't get deleted. So typically that doesn't happen so much, but since we've been just on a rocket ship higher, they've really, really stacked up. But so here's that gap down move for me Sunday evening, for you and probably most people on the stream maybe Monday morning. Price, huge gap down. This was on news. Whoa.
Well,
weekend news, right? Sorry. This was on, I think it was War News, and huge gap down, took out that liquidity, and then just rocketed higher. Those are big tells in the market when you can see that, especially like on a daily time frame. And you can see it very clearly on the daily. Times to perk up and, pay attention a little bit. Whoops, what happened to my chart here?
Yeah, not sure.
Have it zoomed in. There we go. Have it zoomed in super big. So once that happened, that was a really good, typically, I don't know what happened here. Typically, I have the swing lows marked out. I guess I have it turned off for some reason. But here is what I'm talking about. This one, I think I traded. I thought, okay, at the time, it looked like it was going to move back higher, and then it ended up closing below the swing low. But this one here, we had two lined up. I think also, now that I'm looking at it, it does look like this just barely dipped below here and started to look like it was going to recover. But this one was a really, really, I mean, you can see I have it marked out because this one was a big one. It dipped below this multi-week swing lows even. It wouldn't be a swing low on the weekly chart, but dipped below and a strong push higher. To me, this says like, okay, time to pay attention. If you haven't been in, this is a good area to perk up and look. And for me, this isn't a market that I would be wanting to trade. I wouldn't want to be shorting this market. I think this is like an opportunity when you see something like this for me that I'm like, okay, this is a good chance to out of the trend and really capitalize on that.
So what you're looking at the E-mini futures right there. So I'm looking at my chart for WAN, and it's on WAN, and it's a bit different, but
yeah.
Regardless, if you have that move to the downside, there's the gap down, and then it's the close above. So that is that's the typical outside bar.
Mm-hmm.
And if you want to get an outside bar, you need to have not sure, but the gap down here, and then the fact that it closed well above the high of the previous candle is a very, very bullish move. So I was obviously away when that happened. So I missed, this whole week. I missed that whole move because I was not trading and looking at the charts at all that week. But if I saw that, that is very much looking like a breakout to the upside waiting to happen. So probably would have bought that, but then again, it's right at that resistance area. It's a difficult one. I'm not sure, but yeah, nonetheless, very, very bullish reaction to on that gap.
And I think, it's always helpful when you have times like this to really trade with the trend as much as possible. And that is something that we've been talking a lot about in gold. Gold, when it trends, this is the gold futures. So when gold trends, you can get such a nice, like if you think about it like surfing, you can catch a wave and just hang on so nicely, right? Even if you're wanting to short gold, like there were times when the momentum was to the downside and you could really ride some of these moves. Not always, right? Sometimes that doesn't happen, like here, huge move down and nothing really happened. But lately in gold, it has been such a mess. I stopped trading gold for a while now, and this is also all-time highs. This is again gold futures, so it might look a little bit different than what you're looking at, but it's just messy. I mean, we've got these sideways consolidations, we've got these like downward kind of little consolidations, and then just last week Victor and I were talking about how it was looking like a cup, or I guess that was like 2 weeks ago. And then, we said, I wonder if a handle will form. And then last week we added the handle. So we have this little cup with handle here. And he had asked, at what point would you be interested in getting back in gold or trading gold again? And I said, basically, I don't want to participate in this mess. I want to participate when it's you know, you hate to use the word easy in trading because nothing about trading is easy, but this kind of price action is easy relative to this price action. This price action is easy relative to this price action. So maybe somebody could make an argument that this was really, you know, nice, clean down price action. Same here. But for me, it's just going to be much easier once gold kind of, you know, cleans up a little bit.
But you know, the problem with saying that a typical a specific type of price action is easy to trade is, in hindsight, it's so easy to say that because you look at the chart and say, well, that's a clean move to the upside. But when that clean move was being created, it might not have been as clean. But looking back in hindsight, you could say that, well, this was an interesting environment to trade. So, I mean, looking at gold right now, I would definitely argue that it is messy because you have the daily structure is not clean. You have higher highs and higher lows with lower lows and lower highs. You're not really sure about where the exact trend is. To really get a clean trend, you kind of have to zoom out and look at the major lows and the major highs. But on a more local structure, the highs and the lows are all over the place. I do agree that it's not as structured. Personally, I would like to see gold. For me to take a long trade on gold, I needed to come. I did have a trade open during my first session here in the trade, but when we're talking about a more long-term or a swing trade, I would like to get maybe see a bigger move to the downside because it feels like we might be trading inside a range here as well, and then we're probably around the middle of that range, which if you're trading within a range, you probably want to be going long closer to the bottoms and short closer to the tops if you're looking to trade that range. So yeah, it's definitely quite messy.
Well, and I think looking at gold too, like I agree with what you're saying. You know, of course, you only actually know a move is good in hindsight. But if you were, let's say we were in the middle of January here, and we're looking at this, and we could reasonably say, you know, the move, maybe not this specific area, but you could say, gosh, gold has been trending pretty nicely upward. If I can find an opportunity to get in, you know, dropping down to a lower time frame, then that could be that might make sense, especially like, let's say we see price swept these two lows, you know, this one would have hurt quite a bit, but eventually you might have said, okay, I'm going to at least take a position if you find a probabilistic setup, and then maybe you can ride a runner, and that's when the going is going to be really good. And to be honest, I was trading this part of the, you know, what we're kind of calling a cup, because it wasn't clear to me at this point that gold was in what now I see as this like consolidation area. It makes sense because this is all-time highs. This was a bit of a blow off top, you know, parabolic move up, and then it failed, and then it tried again and failed. And so it was starting to kind of clue in like, hey, this isn't super easy time to trade, or this isn't a super clear time to trade. Maybe it's time to sit out a little bit. And I did take a couple looks inside, you know, even later in the consolidation, and it just isn't able to get a nice clean move yet. So I agree, you only ever actually know in hindsight, but you do look for probabilistic trades, and then you find out, oh no, still wrong. And for me, enough of these have added up now that I'm like, you know what, I'm gonna wait until gold clarifies. Now, if I take off this here and we kind of look at what happened, though, we had this this swing low that had been set back in May, and for the first time so far, if let's say that price ends where it is right now, this is I'm not saying a strong bullish move, but it is an indication that price, you know, kind of came down, took some of the liquidity and pushed higher. So while I personally wouldn't be ready to go all in, I do like that it took out the previous day low, the liquidity from this daily swing low, and then so far has pushed above. So it's something to keep an eye on. I think trading in the indices right now is just so much easier and so much cleaner and so much more friendly at the moment.
Speaking of indices, I do see that the NASDAQ and the S&P 500, they are pushing a little bit lower. I think they might be coming below the level that you mentioned. You wanted to see perhaps a flush of a support level. And I think S&P 500 might be approaching that area right now. So I would love to see a move lower before the market's opening. To see that move lower, because then I feel like there's a bigger possibility of seeing that move retracing to the upside when the market's open.
Yeah, absolutely. And the scarier the flush or the bigger the flush down, the and recovery, right? So it needs to flush down and be a pretty decent strong flush. But we built this like little shelf here, and if it can get kind of a nasty flush down and then recover, with some waiting to make sure that price is going to hold at those levels, that could be an area to get in again. But even let's see, last for me is the evening. Price opened up here and had this really strong move higher, kind of consolidated, a little push higher, consolidated. It would be good to see price take out some of these levels and then recover before getting in. So the open is in 50 minutes, 50. And so, maybe we'll even get another swing low set and price will kind of dawdle around, and then we could really get a big flush of this shelf level. Who knows what'll happen, but that could set up a really nice move higher. And right now, price is the all-time high is right at this level here. So I think it's 62, just under 62.90 on the S&P futures, and right now price is about 40 points lower. So right now it's 62.44, something like that. About 40 points. That's not that big of a move. I'm not saying all-time highs are going to happen today. It could happen. We've seen, big moves in this, I guess, push that would take us to all-time highs. But, these were kind of the springboard push where it came down and then the momentum was really strong. So maybe we would hit all-time highs this week. But always looking for good entries to get in before taking a position higher. What's everybody in the chat thinking on the indices? I've seen some talk about gold, and I'm curious if Jonatan had said a lot of traders were out and had kind of missed the move on gold. It's interesting. I did, especially on social media, see a lot of traders saying those kind of things. I don't remember when it was, but a few months ago, feeling like this couldn't be the move, just like you were saying, Jonatan. And I'm wondering in the chat, where are you sitting? Were you able to participate in the move? Are you ready to get long now? Are you thinking it's got to turn around and so the move is lower? Let us know in the chat.
S&P 500 here, right?
Pardon me?
We're talking about the S&P 500, right?
Yeah, the S&P.
Yeah.
Definitely shorting NASDAQ and S&P. Yeah, I was curious if that would be sort of the take that others are thinking as well, because we are so up, we are so extended. Price is so extended.
I think a lot of people are looking to short it because of disbelief. I think we are in like some type of disbelief. But the bulls, the bears, they have to give up at some point. And when they do, if they haven't already, there's a lot of FOMO out there. I've been talking with Dirk, who has a lot of contacts in institutional trading. I've been talking with a lot of other contacts that have some contacts in the banking space, and actually talks with a few people that are in the institutional trading space, and they're getting a bit nervous because a lot of them are actually not positioned in a way that would favor a long, a move higher on the S&P 500.
Mm-hmm.
So a lot of them are starting to feel the FOMO, and their clients obviously want to be exposed into the stock market at this point.
Mm-hmm.
So it's like a lot of conversations about, why are we not seeing the upside on our portfolios when the market is at, all-time highs?
Right. Well, and if
So-
that's the case, I would expect to see, I don't know that to be the case, but if that is the case, I would expect to see this sort of like burst through the all-time highs, maybe even accelerate. Because at some point, you're right, people are going to say, okay, you missed it, but get in before it's too late, type of thing.
Exactly. It becomes sort of a short squeeze. And if the hedge funds, they might have a very, very good idea of where they think the market might be in the next 6 months or 12 months. But if you have a fund and your clients are pulling out money because you're not participating in this rally, then you don't really have a lot of funds to manage. You're no longer a fund manager if your clients is pulling out the money. So there has to be, there has to come a point where even the bigger players are saying, okay, so now we should probably get in on this move now, because, and I feel like we're getting to that point where too many people might be looking to short or be sidelined, and cash is pretty much also a short position if you're not so you at some point you'll have to kind of give up that idea and enter the market. And I think we haven't seen the big public participation in this market, in this rally to the upside. I think we still have a very big portion of people being sidelined. And the crowds, they're most of the time they're wrong at the extremes, right? So they were wrong at the tariffs bottom, and they're probably going to be wrong at the when everyone is entering and when everyone starts saying there's no end to this bull market. But we're not there. Like, we're not even close. We're not even close. Everything that I hear is like, this is not even the bull market. This is not the beginning of the bull market. This is just a prolonged recession. Like, it's just the top. It's just we're gonna dump, and that's like the perfect scenario for continuation to the upside.
Well, the good news is, as traders, at least for me, it's fun to think about these things and wonder what's going to happen, but I just need to take probabilistic setups and make sure I'm getting paid by taking profit level to level, leaving a runner on when I can. And even that, I'm still locking in runners probably a little earlier than I should, because it's the moves are violent. Even Friday, this move here, this is the hourly. I had a runner on and I was like, you know what, this is getting crazy. I'm gonna snug it up, and this move happened. And this is ugly. I mean, check out multiple swing lows in 2 hours, 2-hour candles where it just absolutely crumbled. And then an hour later, almost back to the top again. And so I think the best thing that you can do right now as a trader is just making sure that you're following price action and enjoying speculating, but not have it impact your trading if possible, because we have no idea what's going to happen. I know for me, I absolutely, like we were saying with COVID and also with this scenario here where price appears, I remember at this time we were talking about people weren't going to have enough, they weren't going to be able to cover their positions. Like, it was getting so bad at this time. And I certainly would not have guessed correctly, by a few weeks later, or I guess that's a couple months now, that we'd be back to all-time highs and, pullback who, or like recession who. Like, that's not what we're seeing in this market here. It's been so strong that it's easy to forget that not that long ago, price was just absolutely crumbling. And so best case, just trade what you see presently happening, look for probabilistic entries and setups, and take profit quickly, and pay yourself quickly, leave runners when you can.
Yeah, that's the thing. Like we were talking about, like you said, we were talking about when we had that move to downside, and I was talking about like this could just get much more worse. And I think that was the general sentiment that I saw in the markets. People were just very, very fearful. And even though I've been thinking about this for years, I've been thinking about the mistakes during COVID. And even though like I still got pulled into that mentality of like, yeah, this is bad. But then like, but that's what that's the whole thing. That's what it's all about. It's about, you start feeling those feelings of being fearful. Everyone else is fearful, but you kind of have to go against that, right? And but it's interesting though, like even after so many years of thinking about this and telling everyone in the live stream, like, oh well, buy when there's blood in the street. Even at that point, it's like, well, not this time. Now's not the time, But then it turned out to be the time, and most of the times it is a good time to be buying when you have a move like that.
And it's not easy to do. I mean, that is not easy to see, all the headlines, everybody on social media talking about, the world coming to an end. And then there's these tariffs that we really don't have a precedent for what that might look like. And then war talk, all of these things. And it's like, it's impossible, in my opinion, maybe others feel different, but to make sense of what is going to happen and how things are going to turn out. And that is when it's really easier, I think, to lean in on the probabilistic thinking and probabilistic trading, because you are going to be wrong at some point, one way or another. Whether you call exactly what's going to happen in a macro environment, you call it exactly, you are still going to be wrong. There is no trader that trades 100% win rate perfectly all the time, 90%, that it doesn't happen 100% of the time. And so if you're looking for probabilistic scenarios, I think that's all you can do. And that is the best thing to do, because then you don't have to worry about, assessing and knowing what's going to happen in the future, which again, nobody knows, or, people would have their crystal ball and would be making a ton of money, but we don't know. There's a comment in the chat that says, who are we making money from? And I'm not exactly sure what that is referencing, unless, I had said something like pay yourself or make sure you're getting paid. And if that's the comment that you're referring to, what I mean is when you're taking profit level to level, so very quickly taking profit, avoiding waiting to get paid on a 1 to 5 or a 1 to 3. There's nothing wrong with that. But if you can lock in some gains early, you diminish your risk. And in a market like this, where it can turn and turn in a really dramatic fashion, right? Like if you were, let's say you were long on Friday, this is the open right here. So if you were long on Friday, which would have been a really nice trade, and you were thinking, okay, this is going to all-time highs, there is a good chance that this took you out, right? Because this is a really nasty move. All the gains that you had made were gone in, what feels like a moment. And so what I'm saying is, if you're trading here, maybe you can find ways to take profit quickly to sort of diminish your risk, and then you can leave a runner on. So that's what I'm talking about by pay yourself, or, make sure you're getting paid early, so that you can either weather this storm here, or, maybe you get out because you don't want to deal with this price action, but you still got paid on that really nice trade. I think that's what you're referring to. That it might not be correct, but let me know if that's not what you meant.
Yeah, no, I think it's very important to be. I think that that's the difference between analysis and trading as well. I mean, you might have analyzed correctly that a certain asset is going to bounce at a certain level, but then how you enter that market and how you manage to trade and how you take profits along the way makes all the difference, really.
Mm-hmm. Yeah, absolutely. And I see I don't know how to say this, Galacinus argentinus, is talking about waiting for the American kill zone to start. That is the time when we're going to see extra volatility in the market. That's what we saw on Friday, right? There was this little consolidation that was made. What looked like a really, really nice move was happening right at 7 o'clock. And again, if you were taking profit really quickly, maybe you were able to capitalize on this a little bit. But this is when the move, the really nice setup occurred was when the market opened at 9:30, flush below that, like little mini shelf, and then pushed higher. So we're still about 35 minutes away from that happening. And so, maybe this will change into something, or maybe we'll see an even more dramatic push down, remains to be seen. We don't know yet, but we've got this swing low here, and then we've got another one right here that is getting, price went below just now, and the flush could get uglier. We have no idea. We'll have to see what happens when the open comes.
Yeah, it's going to be interesting to see what happens here. We do have a few like low time frame levels that I'm liking here below price. We also have like a gap, right? Don't we have a gap from? I have a gap on ON. I'm not sure if there's any gap on the futures market. Maybe not.
So there was a small gap. So on Friday, price closed right here, and then on for me on Sunday at the open this week, price did gap up slightly. So that could be a level that price would maybe want to come back and test. That has been a pretty important level last week, where price shot through, came back down, and then broke higher. So we could see a move, much lower than where we are right now. And this little pullback would look like nothing. Price could rip through there and push higher. We don't know. We'll see. But looking for probabilistic entries, and then waiting patiently when price recovers a level. Because of where we are right now, this doesn't seem like enough of a move lower. I mean, it could be all that price needs to now move higher, but I'm guessing that we might want to seek some liquidity lower before really having the fuel to really push higher.
So do you have any specific plan, like any specific plan of action here if price would move down? Are you looking at any specific level to enter? And if so, do you have any type of confirmation that you're waiting for when that level hits?
Mm-hmm. Ideally, I would like to see a really big tumble, and then for price to kind of find a level. And so I have no idea where it would, if it does crumble, I have no idea where it's going to find that support. But there are a couple things here, like this pink line is the previous day high. We're still above that. And then a couple levels that I have outlined here. But if there can be a really strong move lower and then recovery, so the recovery has to happen. I personally don't want to buy any of these levels blind. I want to see it hit a level of significance and then recover, kind of hold that level, and then I would be looking to get long. So it kind of depends. I don't know if that probably fully answers your question, but it's not so much a specific level as it is like the specific price action and recovery, if that makes sense.
No, that makes sense. You're basically you're observing price, and then you're looking at the reaction in price basically before you enter.
Yeah, because like, for example, if the market opens and this little tiny baby flush, which is, it's not that's not a very strong flush. Same here. It flushed the swing low, kind of recovered, but it was kind of non-energetic. It wasn't a very strong recovery. It never even pushed to a higher high. We're kind of seeing that same thing here, like this slow, lazy, like, okay, I dipped below this swing low, but nothing's, technically I'm like right at or slightly above that swing low, but it's not looking particularly energetic. So ideally what could happen is if there is a really big tumble, like we saw this here, this was a really nasty tumble. And it doesn't have to be this far, but like a tumble that you're like, oh my gosh, here we go. And then we get some kind of recovery. That would be an area that I would be interested in, especially because price needs some type of fuel to move higher. And it's gotten tired at this level. A little consolidation here. It's a little bit tired, a little bit lazy. So if it can really crumble down and then push higher, it doesn't have to be like above, but like push down. Let's say that we get some kind of a move like this. I can never find this one. Let's say that we get, you know, prices just kind of doing its thing. And then on the open, we get a really nasty crash isn't the word I want to use, but like a really nasty fall down here. And then from there, we get something of a recovery. I would be interested in getting long there. But maybe that's not what happens. Maybe price is so bullish today that it's not able, or, you know, to get that. Now I can't stop it. There we go. Maybe it's not able to get that low, and maybe it just comes and takes out this swing low on a pretty nasty dip. That could also be an opportunity to enter. So it really depends on what price is doing in the moment. And before the construction starts, I think I better sign off. It's getting a little noisy again. But it was great to see everybody. Good luck in the market today. And I will see you back.
Thank you for joining.
No construction tomorrow.
All right. Perfect. Thank you.
All right. Thanks,
See you
everyone.
tomorrow, Deanna.
Bye.
Take care. All right. Victor, how's it going?
It's going great. How are you doing? How is Jonatan post vacation today?
Oh, Victor, I'm tired. I'm tired today, man. I am tired.
You are? Okay. How was your holidays? Did you get recharged?
It was good, man.
Yeah?
Yeah. It was
nice,
good.
Nice. Like that. If you guys haven't, if you guys are wondering, this is not put in scene, right? This is not a sketch. This is not a scripted. I haven't spoken to Jonatan before. This is this is actually how, you know, the real thing, right? That's why what we do. We show you guys everything.
Right.
We can.
Yeah, that's what we do. We don't talk to each other outside live streams.
yeah. It's not like all planned or anything. Obviously, we have the schedules and things like that, but. We just show you. That just shows goes to show how we are, the transparency and things like that. I have someone from Argentina. Buenos dias. Happy day to you too. Good day, I should say. And we have a lot of regulars. Always makes me happy to see. Also, some saying thank you and goodbye to Dr. Cole. Who is always very generous with her ideas and perspectives for our viewers. But how are you guys doing at home or wherever you may be? Maybe you're on a plane, transatlantic flight, watching us because you cannot stop watching our stream. I know that that's the effect that we sometimes have on some traders. You know, it's collateral. It's not intended to be so addictive, but sometimes it just is, right? So I can't do anything about that. But we are, let's see, how is, we've hit last week 75,000 subscribers, and I'm sure you have talked all about what that means for the coming time, right?
Yeah, we're going to have a giveaway on Thursday. I'm going to have more information on that giveaway on Thursday, but make sure that you do hit that like and subscribe, because if we do get a couple of extra subscribers and hit a higher number until up till Thursday, we might have a little bit of an extra surprise for you guys. But Victor, I need to run down into the office and set up my video equipment. I haven't set it up because I got the camera on the vacation, and now I need to fix something for the camera and do some video recording. Got a trader interview coming up as well.
No problem. No problem. I will. I'll have the honor and the privilege to, entertain not entertain in the purest form of the meaning of the word, but I mean trading wise entertain our viewers, right? I don't see myself as an entertainer, but just as a trader who likes to share ideas. So but I'll have the honor, that's what I wanted to say, I have the honor, the privilege to entertain the audience while you're doing that in the background, Jonatan. I will look at all right, perfect, man.
Well, I will see you guys tomorrow. All right, nice to meet you again. Well, nice to meet you, that sounds like we never met. Nice to see you again, Victor.
Nice to meet you too, Jonatan. It's been a pleasure meeting you for the first time. I like that.
Yeah, we'll see you guys tomorrow. All right, bye.
Bye. All right, so there you have it. Jonatan is going to get ready for his next activities, and in the meantime, we're gonna hit the market. We're gonna look at what you can expect, and I'm all here. You have me for the next 55 minutes still to come. This is an English speaking stream, as you have noticed. But you can ask your question in Spanish as well for those who would like to do that, and I'll just translate it and answer in English. And when we close the streams, the subtitles automatically will translate, and you'll have subtitles in Spanish or any other language that is offered. I think many, as you guys know, on YouTube. Perhaps you guys know better than I do. All right, thank you, Fabian, Marina, Louise, Vinicius, as always. Hi, Golosina. I like that name. Hi, Karim. Thank you for coming by and watching us today. We can certainly take a look at the dollar yen. Actually, that is the next thing I was going to say. Do you guys want me to look at any particular pair? Of course, we have 28 pairs, then gold, silver, and some others. I focus mainly on GU and EU because that's what I trade. So I don't typically look constantly at other pairs, but I gladly do so. And sometimes we get some nice, I get some nice setups just because of you guys. You ask me to, analyze a pair, and I happen to see something that I like, and I take them because my strategy is basically universally applicable, right? It's not fixed to one pair necessarily, one asset. It's just that I can't handle that many at the same time. Thank you, Fabian. Thank you, Kim, as well. We have Kim has Kim has I was gonna say Kim has made me happy to know that all of these regulars are with us so often. All right, so too hot in here. Yes, Marina, that is certainly the place that I am, the city, the location, the country, the one that I don't disclose. It's also here hot, very, very hot. So that ice cream is very, very welcome. All right, let's see. Fabian, it's another holiday. Yeah, sometimes that happens, right? You come back from holidays and you're tired from everything you did on holiday, so you got another holiday to to recharge from your first holiday. Okay, perfect. Let's look at since if there's any, as I said, if there's anything I can check for you guys in terms of the charts. This is the H4 on EU or GU. I mean, I will certainly, if there isn't anything, I'll go back to these two and perhaps gold. But if there is anything specific you want me to look at, maybe a setup, maybe a pair in general, and break it down as I do top down, then I'm glad to do that. And also, if you have like a specific question, especially if it's in terms of risk management, I'm all here. I'm all yours. Take advantage of that. All right. But before we continue, let me tell you guys. Let's Jonatan tell you guys something for a short while.
Listen up, traders. We got a new competition with massive prizes launching at The5ers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. And we're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is just sign into the The5ers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
Perfect. Thank you, Jonatan, for that announcement. Thank you, DJ, for asking. Yes, I'm doing well. I'm doing fine. I haven't had a signal today on my main strategy, but I have taken a couple of scalps. To be fair, I did close a short, not a short, a scalp. It was a scalp, but I left it open over the weekend. It's a small scalp, so it's okay. And I took a hit. Took some losses this morning, which is okay. But that's what I can tell you, right? So you win some, you lose some, which is completely normal. Thank you, Manish, for your question. All right, so we have a couple of requests: Euro, Aussie dollar, as well as the Euro Swiss, and I saw earlier we saw the Euro Yen as well. All right, let's take a look at the first one, Euro Yen. Let's look at the Euro Yen. I can't promise to do all of them, but I will do my best to break them to break down as many as possible. Because what happened is that once I start going in, I start explaining, I start pointing out things that I see, and before you know it, 20 minutes, 25 minutes pass. I'm just done just one pair, but that's okay. Let's see. We have. So this is the monthly time frame, complete top-down analysis from the monthly. What we have is we are at the lower bottom of what seems to be a new range that the market is trying to create, right? We have not one, not two, but this is the second time retesting this area, this swing low. It wasn't an order block before. By before, I mean this area. It was all the way from the beginning. There was an order block. This is the second time it gets there, and actually all the way to the third time. We do have an order block here on the monthly time frame, and this is the sixth candle since its creation. That's a sign that is relatively fresh, or depending on your definition, it is fresh. And the question is, this is the monthly. One thing we can do is, right, it is in a monthly demand area. So automatically what I want to see is if on the weekly, because this is the monthly, if there is a reason for us to take a long, right? Only if there is. If there isn't a weekly, then I'll discard that idea, because that's what a order, that is a demand zone, a bullish order block tells me to do, basically. All right, so we are in a monthly demand area, and if we get closer on the weekly time frame, there is a reversal pattern here. By here I mean this is the head, the left shoulder, the neckline. It broke it, and we could come back to these areas in the future, obviously. And if that were to happen, I would be looking for a continuation of that area, and perhaps at least going to that low or something in between, and perhaps even break it down a little bit, because the market structure is bullish, as you can see. It's coming from below, so to expect price to go much lower is quite ambitious, right? So that's why I say a little lower, perhaps just to the next level. But that's not the case yet. This weekly order quasi isn't at play currently. It isn't. It isn't here. Let me see. Where is it? That the person who asked us for the dollar yen, that is, let's see, there we go, Peter. So we don't have this order block. This quasi only comes into active mode, or only is ready when we are coming back to the entry order blocks. Other than that, it's not relevant right now, right? So do we have, so that's one thing. So there we have a bearish reversal, but it's up here, one of these order blocks, that it becomes relevant. On the if we look at reasons, if you look for reasons to go long, right, because of that monthly order block, which is this monthly order block, 6 candles since its creation, meaning it is fresh, we could look for a alignment, a long alignment. And let's see if we do have a fresh order block. See that on the weekly, that order block, that right there, we are currently retesting it. Okay, so that's one thing. We have at least the monthly and the weekly in alignment. So this is interesting because you have 2 time frame. That's the minimum you need. A bit more is even better, but minimum 2, telling you that there is a higher chance of this actually moving in the direction you're expecting, and the direction is higher, of course, right? This is a bounce from that order block on the weekly time frame. We're currently in there, so let's go to the daily to see if we have anything in particular, anything we can trade, right? We understand that we have come from a weekly and we're coming back to the weekly order block, but that move, right, from weekly to weekly, from one level to the other, that move has already happened, right? So I'm not afraid to go long against this order block, because yes, it can push price lower, perfectly fine, but because we have a weekly order block here where it's coming from, and it's already reached the same order block in the opposite direction in the same time frame, I feel comfortable taking the trade against it, because I understand that the market goes from one level to the other, and we are already at the next level, meaning it makes sense, it's plausible that price could bounce from here back to this order block, at least, if not to something higher. Okay, let's go to the daily. What else do we have? I already see here that previously I did some analysis. We do have a quasi from the left, from the last time we were in this area, the one that created that monthly structure. We broke structure. Structure was broken here. It's not indicated, but it doesn't matter. It was broken, and we came back and we did react favorably, and this would have been my entry area to go long, and we are very close to that, meaning on the daily time frame. So I like this a lot for a possible long, also because this structure, let's see if we can find it in here. It hasn't broken structure yet. So if anything, I'm going to target that order block for my target. If we do get right, this is one. If we do get a reaction, that could be a nice structure to target, and that top one as well. Okay, it depends on the daily ATR. If and when we do get an entry long from this structure. Currently, let's see. Currently, do we have a quasi here? There isn't a neckline here, and there isn't one here either. So I don't have a reversal pattern. Then the next step is, do we have a fresh order block, a bullish fresh order block? We do, but price doesn't seem, by these wicks, price doesn't seem to be at all impressed by this order block. Not only that, but it is creating one and possibly even 2 order blocks, meaning that the order block that I just marked is likely to be broken, right? It's not holding price nicely, meaning it's not something we want to be taking. So I'm still waiting for a market structure that indicates that we have flipped. That's what we need. We need for the market to flip again. Flip again meaning bullish, right? Because we created bearish order block here and another one there. That tells us that it hasn't reversed back, right? We're still waiting for that reversal long, right? And we're trying to catch that reversal as it happens, right? So as it happens, as it creates, let's say an H4, before the daily actually flips over, you can start looking for a possible long, but that hasn't happened yet. So we'll have to be patient. I would say, Peter, to watch for possible reversal signs in the coming days, right? If nothing happens, then just let it go. It probably will continue to just go lower. into this area again, which is a nice area to be trading from. I mean, this area as a swing trader. But if you do get a reversal pattern, like a double bottom, or even a quasi, if that were to happen, then I would target these highs, at least this one, because that was the last last level that was retested before we let me mark it as it is a macro target. But I'll try to extend it to this order block, because I understand the market likely is going to need something a little bit higher, these structures, to reverse back. So that's what I would do. If I don't have a reason to go lower time frames based on the daily. And let's see if we do have, let me rephrase that. On the macro level, meaning the daily and the weekly, I don't have a reason yet to target these macro targets, right? This is not relevant yet. However, I can go to the H4 and get me a daily entry, meaning an intraday entry, a day trade, right? If I were to do that, we would be looking for, do we have a reversal? Yes, we do. It's a nice reversal. I like that. This being the head, neckline, it breaks it. Even though it continues to break it, that's fine, because each time it is making higher highs. So that makes it valid to be taking that this reversal pattern as still active. Let's see if we can get something out of it. The open is 85.1. So yes, that means that we will have here an entry order block on the H4 as well. And that tells me that, yes, all of this is part of it. Actually, it's all the way here, there. And do we have anything else? This one has already been invalidated, which is okay. But you can see, even if it gets invalidated eventually, you can see how the market reacts from them, right? So you can take these trades as the market bounces off of them, even if they are not, the entry for the macro reversal. Because this is perfectly fine to trade. This move, obviously you don't catch all of it, but this move alone was 140, almost 140 pips, actually a little bit more, because I didn't take that wick into account. But anyways, that's beside the point. I would be waiting for price to come in here and see if price on the lower time frames, meaning the hourlies and so on, see if price reverses, right? Starts building those bullish order blocks, and then I could take a long. I'm looking to go take a long from here. Yes, so that's my idea on dollar yen, right? Meaning looking for a long from the H4, and if the H4 reverses and you get a nice move out, since we don't have a daily yet, I wouldn't dare holding that longer, like overnight or even a swing trade, right? Just a couple of hours, just a session, maybe London and New York, but that's it. I'm gonna let the market decide or tell me when it's ready to reverse, even if it's going to. Maybe it's not going to reverse, meaning if it just continues to go down on the higher time frame, I don't want to be part of it. I don't want to be on the the wrong side of the market. But this looks very nice, especially the reaction we had from this structure. We came back. We had that upper border of that order block that was reacted very, very beautifully. I expect that this could well be a continuation coming later, right? That's the reversal as the market is getting out of that daily order block that it already reversed from, getting follow through and so forth. All right, so that's dollar yen. Let's see in the chat if Golosina, thank you for posting on ABL. Thank you for that. I do speak a couple of languages. Not gonna say which ones, all of them, because it's join us on Discord. Perhaps I'll talk about that. Hey, let's see, Imam, how you doing? Nice to see you here as well. Okay, let's continue What do we have else? That was a dollar. Let's look at the other ones. Let's look at the other ones that I would be looking for, which was the Euro, Aussie, dollar, right? That was one of the other one requested. Don't forget, guys, you can be part of our Discord community. If you're not part of it, it's free. It's totally free, right? But it is only for the 5ers traders, right? So you got to be the 5ers. You got to have an account at least. But if you do, it is completely free, right? In your hub account or in your hub area, on the left lower corner, you'll find that Discord link icon where you can click, and that will give you the entrance to our Discord community. Very recommended. If you haven't tried us yet, you haven't looked, have any experience, it's a great place to meet other people who are like-minded traders, and it's also a very, I think, a very fertile area for you to grow as a trader. That's what we try to offer. On our workshops, I'll be giving one in about an hour and a half. We discuss many things, actually anything that is relevant for our traders. It's in a small group, or smaller. It's not that small, but smaller than on YouTube, and that's it's awesome. I really enjoy our sessions. All right, so on the Euro Swiss, let's look on the higher time frames. Can we see where are the demand and supply zones based on this time frame? I'm just gonna mark a couple of them. What else do we see? Do we see there is something here? Has it been invalidated already? It hasn't. Look at that. Hasn't been invalidated. So basically, we are in a demand zone. However, this wick tells me that demand zone is not a great one, right? So you don't want to be basing your entries based on order blocks if if price reacts to them like this. That means that the order block isn't the structure that is being reacted upon. So that's important. There is an order block there, a bullish one, but it's not as relevant in my opinion. This is the one that is at play, right? You have it's a monthly order block. Let me see. All right, so it is a monthly. Let's mark that as such, and that's the force at play here, right? So not the bullish one, but the bearish one. So I'm going to be looking at the area to be. Of course, we have already the opportunity. We are already outside of it, but that's that where this wick enter this order block. That's where you want to be looking for the lower time frame, the weekly, and then the daily to get your alignment short. So we do have a short order block there. Let's see. That is beautiful. I like this. Look at this, right? Market comes back to this order block. It didn't have this reaction before. This is the daily. It didn't have the reaction. Look at the candlesticks as price came back. Let me look. This is April, so you have to look. All of this was one candle, one monthly candle. So we did have a reaction here. That reaction was invalidated, but we do have another reaction. This is the weekly, not the daily. All right. This is the weekly, so I would be looking for the daily time frame to see if we get something of interest. Actually, we do. Look at that fresh order block being retested. Because this pair is much more rangy, as you can see, you have to take that into account when you put your stops, right? You got to give them more room because market ranges, even while it has a certain band in which it moves through. You can see how it is not moving in just one bar, but multiple bars going down, multiple bars using in terms of width going up and down. So that's something you need to take into account. That means that you have to give it more the stop a little bit more space or leeway margin, so it doesn't you don't get stopped out in this up and this rangy moving it has. Okay, so you have a daily order block. So that's nice, although that's 2 days ago. So I do see something very interesting here. I would be looking for a short in this case, right? Because we have the monthly. You can see clearly that fresher order block that was created, a immediate retest on these two candles, and on the weekly time frame, you can see how the market reacts the first time, but that was invalidated the second time around. But this now did create a new structure, a new daily order block, and even a let's see, a weekly, yes. And then we come back. This would be the time to get in on that wick, if that's possible. And I would be looking for quasis. If there is any retracements, let's see. I will be looking for on the H4. Let's see. There you have it. Actually, even that would be a valid quasi line for me, and that is the area you want to be taking the short from. Right? You would have needed a lot of patience though, because it did go in and out of it for a couple of days, but it never invalidated the area, right? If you were to trade this quasi, you would have put your stop above that line, above that area, and would have just leave it, and you'd be just fine. That, of course, that already happened, so that's a pity. Last Friday would have been the last Tuesday, Monday would have been perfect to trade at. I would assume, by the way, that the market is trying to reach this. I don't know what's going to happen, but I would assume, based on this structure, this is what the market is going for. Okay. The fact is though that it already moved, so you can take a long, but you got to be very careful that the optimal area to get in was that order block on the H4. So you could look for a fresh order block on the H4, but keep in mind you don't want to hold this very long, because it's not optimal getting in when the market is already halfway through the structure. This is the area that I want to go short from. If you're already in the area, actually you would have been having there is an outside bar here, right? So you would have been looking for an entry here. That to me would have been the area to go in, right? One of these order blocks, as they are being created, could have been your trigger to go in, and that means something like that, putting your stop above here, and then targeting this or something else on the left, depending on perhaps this order block as well, something like that. It depends on exactly where you enter. That would have been, but it's already too late, in my opinion, to get that trade. Obviously, it already moved, but I mean, that was the opportunity. If it would come back, which could happen, then this would be the area. But I would want to get in on the hourly there, but I doubt it's gonna do that, because it seems to me like look at that impulsive move. That's typical when price starts moving in the direction of the structure. It's quite difficult. It's not likely to come back all the way, but if it were to come back, that's where I would be wanting to go in, and only if it respects this order block, right? If it closes above this, I want to have a piece of it. I just want to get out, and I could target either this or the whole area. That's up to you. All right. I hope that helps you. For that person who Euro Swiss, that is. Someone asked Euro Swiss. That wasn't Isa. That was someone else. Let's see who it was. Well, it doesn't matter, but I'm sure it was. Yeah, here we go. J Lunar. I hope this helps you. Boring ranging market, you say. Perfect. I think there's boring is a relative term, because you can, if you're focused on trading ranging markets, it can be very exciting, in the sense that it can give you a lot of opportunities. And even though it doesn't have directional volatility, it just goes, ranging. It can be a lot of fun. I mean, giving you a lot of opportunities and working just perfectly. So I would be, I don't know about that boring part, but yes, I understand what you mean. Okay, let's look at the next pair, gold. Gold is always a favorite of you guys. But before I continue, I'll look at the chat to see if I missed anything while I was talking or breaking down these areas. Golosina seems to think it is a bearish movement on gold. Okay, let's see. Gold, oro, yes, gold. Let's see. We'll look at gold for sure. We'll definitely look at gold. That'll be the next. Okay, perfect. Let's see what else. Any messages that you guys? Thank you, Stephen. Thank you very much. I hope the same to you. I hope you had a great weekend. Awesome. Like to see you guys come in and saying hi. And thank you for those great wishes. Perfect. Let's look at. Thank you, Victor. Victor to Victor. Thank you for those nice words. We try our best. We really want you to succeed. So we'll do everything possible as a prop firm to make sure that you're well catered and serviced. We're not perfect. Nobody is. But we do our best, and that is what really matters. You can count on us and trying our best to make sure that you have the best trading conditions. Just take a look, and you'll see. You'll have we'll try our best to keep the service as high as possible, so that you can have a good chance in succeeding. Okay, I'm almost through all the messages. Quite a lot of them I am not able to no problem, Jay, no problem at all. That's why we're here. We're here to help. You have to see us as a friend of yours, trying to do, to help you in any way we can. Born in 2944, born in the future. Says ranging markets can drain you psychologically. Well, yes, that is if you're waiting for a breakout. Okay, if we come with the mentality of a breakout and looking for that bigger move in a ranging market, then sure, it will drive you nuts, right? Because it will not break out. It will just fake out all the time, fake down. However, if you're trading, just the range, going from one side, going long as it goes to the lower end of that range, and going short at the upper end, and it keeps on ranging, you can understand that can be very lucrative. That can be very easy. I don't want to say it's easy, but that can be very, very nice to trade. I obviously, the trick is to recognize when a market is going to not only is ranging but also staying ranging long enough for you to take advantage. What you have to do is just if you break in the higher time frame, let's say the H4 or even the daily, depending on what time frame you're trading, if you see in that particular the one step higher, it is rangy, you just trade it as such until it breaks out, right? You stop thinking it's ranging market if you have those breakouts. But as long as it lasts, nothing's stopping you from going long as it gets to the upper area, the supply zones, the extremes, and going short and then going long as it gets to the demand area. That's perfectly a nice way to trade or market structure to trade. All right, someone asking here, euro dollar. Yes, I think I will finish with euro dollar, since that is the one that I trade myself. And GU. All right, so let's look at gold. Steven, let's look at gold, my friend. How are you doing today, Stephen? Let us know in the chat. We're one big family. You can, let's look. All right, so let's look from the higher time frames. So we'll go very quickly so we get enough time for the euro dollar. We still have about 42 minutes to our stream. Today, we don't have any high impact news. We do have Lagarde, ECB's Lagarde, and speaking later on in about, let's see, about 4 hours and 20 minutes. But it's an orange folder event, so it's not expected to move market too much. All right, but I do say though, even while it is orange, if there is any surprise, it can sometimes it can move the market a lot. I remember not long ago, a couple of months ago, it was a orange folder speech of Lagarde. It was Lagarde that was going to speak, and the market moved I think something like 80 pips after that speech in the price action afterwards. So it can be, I think it even continued the rest of the into the next day. It was a big move, I remember, and it all began with a speech of Lagarde, an orange folder speech. So don't underestimate these events. Okay, so on the higher time frame, there isn't a lot to be said. We are obviously, this looks like a launch. It looks like a space shuttle going to the moon. It's almost a straight line going up with very little retracement. There isn't a lot. There's one thing though that I think I want to tell you guys about, which is this line, the open. This is something to think about when I see this. I'm gonna take this arrow away because it kind of obstructs. It distracts us a little bit. What we have here is a small, even though it is a bullish, market structure is bullish. That's no question about that. We can clearly see that crescendo, right? The size of these candles from small to quite large, and to it in the last few bars, last two, not the current one, the last two bars, that crescendo didn't continue, right? This bar, the body wasn't as big as the one before that. I'll indicate it with an arrow so you can know what I mean. This one was smaller, meaning that could be a indication of a deceleration. It's only just one bar, so it's not a lot to conclude. You don't have a lot to go on to conclude that. But the following one, which is last month's candle, is even much smaller, indicating that impulsive move is decelerating. It's slowing down. By definition, if it is if it has a very little body, it means that it didn't net from the beginning to the end. Obviously, it didn't move a lot. It moved during the month, but comparing just the open and the close, it didn't move a lot, meaning that both market participants, both sides, are in very close to equilibrium, right? So that's one thing we see, and this is what I want to tell you guys. So this area, the line, the open of, let me change that to let's see, let's look. This is not a weekly, but let's change that to a monthly. Okay, there. The open is going to be seen as the line in the sand to interpret this candle. And as we know, this is a monthly candle, and today is the last trading day of this month. So this is very interesting because whether or not it is able to close above this blue line, which is actually in this price feed, it might be different on your price feed. Do check that. It is 33,287.66, right? So that is the line in the sand that will decide whether we actually have a bearish engulfing or not, right? Whether a bearish order block is going to be formed. So I think that line you can use to decipher and interpret price action on the lower time frames, all the way to the, I know this is the monthly, but you can look this up. We can surely go now, actually, without looking into anything else. We can just go to the, let me see if I can make it visible, but I see now that it's not visible. Let's make the visibility into the hours as well. Okay, let's go here on the, let's say the H1, and you will see, not always, but what you'll see is that the market will tend to react on this line, right? Meaning it will have, not perfectly all the time, but you will see that it will react. It will, if it is below it, it will, consider it as a resistance. And when it breaks out of it, it will react upon this, something like this. So you can use this, one thing, to understand what the next candle, meaning the next month, is likely to be. And because if it closes today, at the end of the day, below this blue line, right, that 32.80, what was it, 87.66, we can understand that the likelihood of price going lower is going to be just a little bit higher, but that's something you can use. That's valuable information. And the other thing is that the understanding that this is a line that's going to be change or affect a lot of decisions on all time frames, the daily, the weekly, the monthly, and even the lower time frames. You understand that you can take trades from this level, right? You can short it each time it gets there from below, or you can go long each time it gets there from above, right? So that's something you can use. The higher time frame structures, in this case a open of a previous candle, to take trades from, or to use it as some kind of confluence. All right, that's the only thing I can say about the monthly. Okay, so let's go to the weekly. Weekly, we had a 2 order blocks, both of them very tight, close to each other, meaning that the market is kind of indecisive, right? That's another expression of the same thing we saw from that small body on the monthly. The market isn't really choosing direction, right? It goes up, goes down, but it really, in the end of the month and the end of the week, it's not going really in any direction very convincingly, right? And it creates and leaves behind these 2 order blocks, which you can see is very typical of a ranging market. Although this does have a bullish undertone to it, you can see that it has, it almost broke that order block, invalidating it. And it hasn't, at least not yet, it hasn't done the same on the lower side. And because it came from below, you'll understand that obviously thinking, or the path of least resistance could well be to the upside. And that's no surprise that it almost broke that order block. But is that something significant in the sense, can we use this for our setups? Well, we do have an order block here. It is still valid, although quite weakened by that price action. We have, you could use it, sure. It is. I mean, it is a weekly order block that is still at play, so why not? There is, however, I talked about this last week, there was a very nice area, right? Very nice order block on the weekly time frame that was created out of that outside bar. And as we can see, that has been invalidated, meaning that the market will perceive it now. I'll put it back. The market will perceive it now and probably use it as a flip structure, meaning was a demand area and probably will be a supply area now, right? So that's something to consider, right? Okay. I'll leave it in because I think we can use that for possible setups. Other than that, of course, we can see that the market has come, and it is, it's on both sides. You should, in a ranging market, that's exactly how you should trade them. Both sides, you look for longs here and you look for shorts up here. So we can do both. In this case, I would be, let me move this a little back. I will be looking to get a, this is the weekly, of course, right? I will be looking based on this broken structure, looking for a short as price is getting back and retesting that from below. Let's see if we can. This is just the bearish structure. Do we have a bearish reason or a reason to go short? I don't see it. I don't see it here on not a bearish one, right? The structure to go bearish would be up here, above, much higher than where we currently are. So that tells me that, you know, I don't see an opportunity to go short gold. Let's see if we have a reason. We do have the reason I just mentioned to go long, which is this order block. I'm going to move this away so we don't get confused. The only reason we had to go short was this weekly order block, but the daily isn't telling us anything here, right? There isn't a place where we can actually go short from. Not the daily. If the daily isn't there, then I don't see a reason to go short from that. Just because the weekly tells you to go short, you really have to have a daily as well. Otherwise, the weekly is just a given information, but it's not really helping you. Okay, that's it on the sell side. Let's look at the buy side, right? So we do have a bullish order block here. It is from its creation. It is the 5th candles. When it was retested, that means it's fresh by all means and purposes. In all sense and purposes. So let's look at the daily. Do we have a reason to go long on the daily time frame in gold? Yes, we do. Look at this very beautiful inverse quasi. That's the established downtrend. Breaks the neckline, even though it's a little bit, it is broken, and comes back to one of the two order blocks where it could have its continuation. Which of the two is, you don't know. That's predicting the future. We don't do that. We just recognize that it is in one of those two areas where it could reverse. Buyers could come back in and reverse price. Okay? But on the daily, it hasn't reversed yet, right? Do we see in price action? Look at these candles. Do we see the market reversing bullish? Not really. So the time isn't ripe yet to go long. Right? That means that the idea, this setup, has to be, you know, put in the fridge for a couple of maybe reassess tomorrow or, you know, coming days to see if we have bullish structures being created, and then we can act upon it. But until then, we don't do anything with that idea. Let's look at the H4 if we have a reason to go long on the H4, and actually we do. Let's see, we have this is from the beginning of the day of the week. You have to watch out though with candles that are created at the end of the day or the beginning of the day. The same goes for the beginning of the week, right? Because you can have a spread creating the wicks, and it's not actually indicative of, you know, any particular price action. So I would be interested in this H4 for a long. Too bad that we don't have a daily reason to go long. So I'm not able to upgrade this to a swing trade, but I am able to, not a possible entry, just a regular H4. Put it into the freezer. Yes, maybe in the freezer. Yeah, not only in the fridge, maybe in the freezer. Let's add the H4. Let's look at the bye-bye, Marina. See you in Discord. Thank you for stopping by. We appreciate your support. All right, so the what we have is we do have a H4 reason to go long, and this is the retest. Look at that. It was created. These are immediate retests, so you can expect, even though the market structure is not in your favor, market structure is bearish, right? Impulses are to the downside, but still you can expect some kind of a move. I don't say it's going to break and reverse yet, but some kind of a move until perhaps it continues lower, right? Since we don't have any reason to think that this is a reversal, but that is the kind of move you can get out of these H4 order block, but only if you get alignment. So let's look. Can we define? Do we get a in another order block on the H2 or in the H1 that is either part of a quasi or part of a fresh order block. Let's see. We do have a quasi. Yes, we do. Look at that. That is beautiful. Look at that. H1 quasi. That's the left shoulder, the head, the neckline. It breaks it, comes back. And we have actually, we have 2 order blocks that I would be interested in going long from. That's this one and this area. We're a bit late because it did already react to that, the first one. But let's see if it's if I would have taken it based on the retracement. I wouldn't, right? Taking it above the 50% retracement is, in my opinion, is not very selective. It's not selective enough. So I would wait for price to come to this area and only then take look for a possible entry on the lower time frames. Let's say in the 15 minutes or whatever time frame is suitable for you. All right, so that's gold. I would be looking for today. I would be looking for a possible reversal from that area, and if it doesn't do that, then I will. It doesn't get there. I would just not trade. If it doesn't come to you, you shouldn't chase it. No trade chasing is good. So this is the area that I want to be trading from. And when price gets there, well, it's up to you to understand and identify if and when it is reversing and when not, because you don't want to get in just because it got to this area. You want to get in only if it confirms by telling you it seems to be reversing. There is a higher chance that it will, is trying and will succeed in reversing. And then I will take the long from here, put my stop there, target either this or something much higher. And since it's gold, it's actually also good to just put your stop below the whole structure, because gold, as we know, it can wick you out of your trade without really invalidating the setup. So that will be something that I would be trading on gold. And going back to the daily, I'm looking for a long possibility, but it has to convince us. It has to show bullish structures. Otherwise, I'm not interested. I'm not going to go chase gold. If price action isn't convincing, then I don't want it. That's how you should look at it. If you're too eager to get into a trade, then it will be very easy for you to get into a trade, and that's not something good. Bad player. I see that you closed your. Okay, so I see your discipline is off. You're saying still have the fear of losing the account. Actually, this is a very good comment. The bad player. Why do you fear losing your account? Maybe you said it in the chat and I haven't read everything. Let me go check a couple of things before. Okay, so this is where it started. You mentioned you did have some great trades. You were looking for something solid, but the day isn't coming your way. All right, I understand that. You're missing the good trades. All right, perfect. I see that you have been, others in the chat are helping you, and that's exactly what we want to see. That's the kind of community we want we want to build, where everyone is helping each other, because that's what makes us, better as community and individuals being part of that community. I see you say some preparation perhaps wasn't optimal, wasn't enough, but you say discipline is off. I would want to ask you, because when I saw this comment is the reason why I put it on the screen. You need to ask yourself why. Why do you think your discipline is off? Is it because you're not sure about your strategy? Is it because of stressors that you might have in your life? Is it because of, something else in your life is not going as planned or as desired? You don't have to tell us in the chat. Obviously, this is private, but it is for you to find out why, we behave the way we behave. Because it's not the end, obviously, that you have a bad day or your discipline is off or your fear of losing the account. That's not as how do you say that? That's not as bad. What would be bad or is if you didn't know, right? And you leave it unattended, because until you figure out why your discipline is off, you're most likely to stay in that state of behavior, right? So it's going to be very difficult for you to succeed if you're lacking of discipline. You don't know why, and that's going to make it very difficult to address it and change this. So I would want to ask you, if you're part of our Discord server, I'd like to invite not only you, the bad player, but everyone else who is watching us. In about 45 minutes, we're going to have a workshop. I'm going to be hosting it. And that's exactly the kind of questions we ask among ourselves, right? If someone is having a bad day, I typically want to, have a little exchange asking, do you know why this is happening? Is there a way for you to find out? Because these are the not comfortable questions to ask, right? But it's the necessary questions that need to be answered in order for you to improve and move on, elevate your skill and your results. So that's one thing. And the other one is obviously what you mentioned yourself. You have a fear of losing the account. I want to know why, right? Ask yourself, why is it that you're fearing? Are you risking too much? Are you in a deep drawdown? Are you, because you're not disciplined, you don't trust yourself that you're going to follow the plan correctly, or maybe a little bit of all of the above. But these questions, this is very, very necessary for you to become profitable. It's very, very difficult to be, have consistency in trading, and we all need discipline and consistency. If we don't do this self-reflection and trying to figure out what is happening and before we can be able to look for ways to address these things, and they're perfectly addressable or fixable, or there are solutions to these. But the first thing is identifying the triggers, the factors that plays into this, and why, the motive behind them, things like that. All right, so all right, let's see. Exactly, right? Not having a good risk management strategy, right, is could be the basis of having the fear, because you don't know, it's unknown to you what could happen. But if you really have a solid risk management, what are the possibilities, the chances that is, that you keep on losing. You have an idea, you have statistics. You should have statistics on your data, and from that you infer what the chances are for you to win from here, or keep on losing, things like that. All right, we have thank you, bad player, for sharing this with us. I think that's very brave. I want to applaud you for being brave and talking about this, obviously, in public. You don't have to, but I think it's very helpful for yourself to have this conversation, either with yourself or with someone, someone that could help you. As I said, you could come into our Discord, and we could have a in a smaller group, could have a little conversation on these, and we can touch upon things you can do to figure out what's happening, and what you could do to increase it going forward. All right, this is the end of our stream. We've gone a couple of minutes over. I would like to thank you all for coming by. I hope we didn't do the euro dollar, by the way. Yes, we didn't do that. I'm going to say just a couple of things for the euro dollar. So I'm not going to close yet. The monthly time frame, we have a structure above us, which this was the previous structure we had, and today is going to be the end of the monthly candle, right? So it's not going to there's the chances that this is not going to be invalidated as are practically zero, meaning that, you know, this is already gone. This is the next level that we're going to long term, meaning in the next couple of bars. That's the only thing I have to say on that time frame. We have we left behind a couple of demand area that I think would, if we get to these structures before hitting that monthly target or that monthly structure, then these would be a very nice area to go long into that. Meaning, if this were to happen, that would be my trade, right? Going from the demand area into that monthly order block that we have above that. That is, we'll have to see in the coming days if we have a retrace into those levels. On the daily time frame, I can be very short about it. You know, I don't see any opportunity right now. The market has been very, very bullish. It can continue more, but obviously it would be healthy for price to have some kind of a retracement, right? You can't, you know, trade with that idea, but you can, you know, knowing that it's likely to, you know, the chances of a retracement will get bigger as the more candles we have in one direction. And if we go to lower time frame, the daily, so the daily doesn't tell me anything of opportunity other than below us, right? When it comes back. And the H4, we have a quasi. I can show you here. I would consider this the quasi line. This is the H4 quasi, and then that makes this the head, the left shoulder. Until we break this, we shouldn't be looking for any shorts. Even though I said that the likelihood of a retracement gets bigger the more, you know, consecutive bullish candles we keep on having. But the thing is, you know, the timing aspect, and one of the best way to time this move is that wait for the market to break the structure, taking out that neckline, and then you can start looking for that possible reversal, which would be on the higher time frame a retrace to trade from. Until that happens, I think we should, you know, not assume it's going to reverse necessarily. We had a very nice reaction from this order block that happened on Friday. And I would assume that the market wanted, after that order block, that the market wanted to retest this level. This order block, there is nothing to stop price above us. So obviously, I'm going to be looking for price going this area, trying to retest that, making a double top perhaps, or just break it and continue. That's what I understand from this time frame. Other than that, there isn't any order block, and I don't go lower than the H4 because to me, the H4 is king for day trades. Right? I'm a day trader, and I focus on the H4 to gather my ideas, my direction, and my opportunities in the market. So that's it. That's it on EU. I can be very short. I could go deeper, but it's not necessary. All right. So making doing my promise, complying on that promise of doing EU. I think we have, this is the time to finish our stream. I'd like to thank everyone for watching, for being part of our stream. Thank you very much, Sunil. Come back tomorrow, and I'll gladly do more pairs or answer any other question that might help you become better. So on that note, I invite you all to come tomorrow. Hit the like button, subscribe to our channel. You just hit 75,000, And that means that we're going to be having giveaways this week, Thursday. But if you keep on, hitting the button, the like button, subscribing, we will hit next milestones, faster. Faster meaning faster you will have giveaways, right? So we all win. All right. See you guys in the Discord for those who are part of our Discord community, and everyone else. I hope to see you tomorrow. Same place, same time. Bye-bye.